All right. Good morning, everyone. I'm Saurabh Arora. I'm November 11 batch pass out chartered accountant, and I've been working in the internal audit area for last 9 years. Welcome to the virtual coaching classes organized by Board of Studies ICAI. Today we are going to discuss about chapter 15 of advanced auditing and professional ethics, which is the internal auditing, management auditing, and operational auditing. So here we go. So first of all, we'll discuss about the scope and coverage of this lecture that we are going to discuss today. So first of all, we have covered the in-depth coverage of study material. Please understand that no additional material is required to crack this exam. Only study material is good enough to crack the exam and gain the conceptual clarity. Secondly, we are going to discuss the practical examples for easy understanding. The students are requested to quote practical example to demonstrate conceptual clarity. And through these practical examples only, they are going to become a good auditor. Third is the practice questions and solutions to help in internalizing the concepts. Fourth are the key words underscored or bolded for a quick glance through. So understanding the concepts using keywords, using them in the revisions and writing them in the exams is essential for good marks. Sometimes students miss to write these keywords and then they wonder why the examiner deducted their marks. It is precisely because of the reason that they missed the keywords that need to be mentioned in the exams. So the examiner doesn't expect from you to reiterate the entire standards on auditing, to reiterate the study material in the examination sheet. That is obviously not expected out of the students. What is expected is the conceptual clarity. And how will you demonstrate the conceptual clarity? Through the use of keywords that I've already underscored in this PPT, which you can get from the ICAI website, and through the practical examples, and obviously by quoting the standards of auditing name and then answering the questions that have been asked. Then the student friendly quick revision notes I've also mentioned in this PPT. So this is one page summaries of big concepts, and also I have mentioned some quick memorizing tips that you can use if you want. So let's move on to the next slide. So in this chapter, the objectives of learning are to know the meaning of internal audit, management audit, and operational audit in detail. The scope of internal auditing, we are going to discuss about internal audit in little more detail than the other audits. Then the analyze the relationship between internal auditors and external auditors, understanding the difference among the three audits. Simple. Let's move on. So we'll start with the internal audit. So the first question is, what is internal audit? See, the framework governing internal audits, which is issued by the ICAI, defines internal audit as the internal audit provides independent assurance. It is independent assurance on the effectiveness of internal controls and risk management processes to enhance governance and achieve organizational objectives. I know there are many key terms in this definition, so we'll repeat it and then we'll try to understand what all these key terms mean. So, internal audit provides independent assurance on the effectiveness of internal controls and risk management processes to enhance governance and achieve organizational objectives. So, example of risk management process could be credit risk analysis of customers to decide who should pay in cash. For instance, e-commerce websites like Amazon and Flipkart do not provide cash on delivery on certain locations. It is precisely because of the risk management processes that they have followed, and they have identified certain areas which is more prone to the frauds and refusal of payments. So we have understood what is risk management process through an example. Now, what are internal controls? So internal controls is a very important concept, and students are requested to please pay good attention to this concept. And how we are going to discuss it? We are going to discuss it through examples. See, we can read the definition over here. It is very easy to read the definition and memorize them. But what is difficult and what is required out of the students is to understand the concepts clearly and through examples only. So we are not going to force the concepts on the students. So we'll give you 5 examples of good internal controls. The first one is the payment approval matrix that you have come across in your articleship as well when you would have gone for the auditing of some good organizations. So what is payment approval matrix? Payment approval matrix is an internal control. For instance, here for this example company, we have before making a payment of more than 5 lakhs and up to 25 lakh rupees, the approval of a senior manager shall be taken. And for about 25 lakh rupees, the approval of a general manager shall be taken. This is an example of payment approval matrix. So this is just an example, but what is the purpose of this internal control? To put checks and balance on authority and responsibility, to put checks and balances on the authority and responsibility. So this is the example, and now I've discussed the purpose as well. Second example is background checks are conducted for all employees and contractors. Why do we have this internal control? To avoid frauds. Third could be quality checking before accepting the goods from the vendor. Why do we have this? To avoid cost wastages. Then we have resolving customers' queries and complaints within 24 hours or whatever the standard or whatever the SLA is. But what is the purpose behind this internal control? Meeting organization objective of, let's say, being a customer friendly company. Then the last one is daily cash reconciliation and deposit of cash receipts for a retail chain company. This is for effective accounting process and efficient cash utilization. I hope these examples are self-explanatory. I have intentionally put this simple internal control example so the students can grasp the internal control concept in an easy manner. And since this would be your introduction to this concept only. So I'll go through them again. Payment approval metrics, background check, quality checking of the goods, resolving customers' queries, and daily cash reconciliation. So these are the example and what are the purposes? Putting checks and balances on authority and responsibility, avoiding frauds, avoiding cost wastages, meeting organization objective, and then for effective processes and efficient resource utilization. Are these internal controls actually important or are they statutorily required? Of course they are. Of course they are. And we'll discuss the applicability of internal audits in the later part of this chapter. But as an example, you can see that SEC, which is the corresponding body of SEBI in the US, which is Securities and Exchange Commission, charges 4 companies with failing to fix internal control problems. And this is just 2019 case. So what SEC said in this case, this is not for remembering, this is just for conceptual clarity. What SEC said in this case that the four companies which were found guilty of fixing of not fixing their internal control problems, the SEC said that it's not just enough to disclose that the internal controls are missing, but it is also required to fix the internal control problems in the company. So we'll move to the internal control definition right now. So internal controls provide checks and balances implemented by the management to ensure that the business processes are actually working efficiently and effectively with least cost wastages, no frauds are happening, and the overall objectives of an organization are being met. So there are keywords which I have bolded over here. So checks and balances implemented by the management to ensure that the business processes are actually working efficiently and effectively with least cost wastages, no frauds are happening, and the overall objectives of an organization are being met. We have referred to the example of each of these cases. But please note over here that who is responsible for the implementation of internal controls. As the definition says, it is to be implemented by the management of the organization. Just remember this, that internal control is the responsibility of the management. Third point is governance. So many students get confused with the definition of governance or even with the meaning of governance. Please understand this concept very clearly. Corporate governance is the system by which companies are directed and governed by the management. Corporate governance is the system by which companies are directed and governed by the management. Through use of ethical business processes, the management is able to ensure accountability, transparency, and fairness in the company operations, thereby ensuring that the interests of shareholders and all other stakeholders. Who are all other stakeholders? Vendors, customers, employees, government are protected. The board of directors are responsible for the governance of their companies. So, who is responsible for the governance? The board of directors. And who is responsible for the internal controls? The management. So, corporate governance is the system by which companies are directed and governed by the management. Directed and governed by the management. We'll see the examples of corporate governance, good corporate governance, and bad corporate governance. This is again just for the conceptual clarity. So here we have the good corporate governance example of Infosys and the bad corporate governance example of Satyam. So here what we can see is that Satyam grossly violated all rules of corporate governance. What are the rules of corporate governance? Fairness, transparency, accountability, and maximizing the shareholder value legally, ethically, and on a sustainable basis. So the Satyam scam has been the example for following poor CG practices, which is corporate governance practices. It had failed to show good relation with the shareholders and employees. Both are the stakeholders of the company. It failed to disclose transparency in business transaction, failed to comply with legal and statutory compliances. That is, it did not deal fairly with even the government, which is also one of the stakeholders. Then unable to protect the interests of stakeholders, unethical action and code of conduct, and inadequate disclosure of financial information of company to stakeholders. So all of the elements of good corporate governance were compromised over here. And so what do we have here? The quote of Narayan Murthy, who is considered as a stalwart in corporate governance. So what he says is that good corporate governance is about creating sustained competitive differentiation in the market. This is how you create a differentiation in the competition to maximize the shareholder value legally, ethically, and on a sustainable basis with ensuring fairness, transparency, and accountability to every stakeholder, not just few of them, to every stakeholder of a company. And who are the stakeholders? Please remember this. This concept is very important, that who are the stakeholders of a company? Customers, employees, investors, vendors, and the government. So these are the stakeholders. So this is the difference between a good corporate governance and bad corporate governance. Now, so we have dealt with the definition of governance, with the meaning of governance, with the definition of internal controls, with the meaning of internal controls. Now we'll revisit the internal audit definition with our new apprised knowledge. So internal audit provides independent assurance on the effectiveness of internal controls. We have read about internal controls and risk management processes to enhance governance and achieve organizational objectives. I hope the definition is little clearer now. But you need to revisit this definition in revision as well, so that this becomes internal, so that you can internalize this concept and this becomes cemented in your head for a long time, for at least exam, I hope. Then there is a difference between board of directors and management. I have put in this slide because many students ask me this question, that what is the actual difference between board of directors and management. And so this is just for conceptual clarity, no need to remember this slide, but you should find this little interesting through the use of this diagram that I've provided over here. So as we can see that board of director, management, and shareholder, this is a triangle between them, and this is a relationship triangle between them. So board of director provides guidance and supervision to the management. Board of directors gives guidance and supervises the management, and represents the interests of shareholders, because board of directors are appointed by the shareholders only. So they represent their interest in the company. And management reports to the board of directors. So board of directors provides guidance and supervision, and management reports to the board of directors. Then management looks after the day-to-day operations, and the board ensures that the shareholders are adequately represented. Also, since management looks after the day-to-day operation, who looks for the strategic decisions, for mission statements, for whether the company is actually meeting its objectives or not, the board of directors overlook them. So the relationship between board and management was strategically developed for high efficiency organizational success. Boards address the broader mission focused activities, leaving the daily managerial activities to the managers only. And board of directors again represent and report to shareholders, and shareholders in return elect and dismiss the board of directors. So this is a very important relationship, which should be understood for conceptual clarity at all times. Now we'll move on to the indicative objectives of internal audit. So we have read about the meaning of internal audit, we have read about the meaning of internal controls, corporate governance. Now we'll deal with the objectives of internal audit. Why do we even need the internal audit? So first of all, to monitor the internal controls, whether the internal controls are actually working or not, and whether they are meeting the intended purpose or not. Second is the examination of financial and operating information. But doesn't statutory auditor does that? Of course he does that. Of course it is his duty to examine the financial information. But what we have over here is the operating information as well, to which the internal audit places special attention as well. External auditor does not look after operating information in that detail in which the internal auditor has to look at that. Third is the review of operating activities. External auditor doesn't do that generally, that he doesn't review the operating activities in detail, but this is the part of job of internal auditor. Review of compliance with laws and regulations. Again, here the duties of internal auditor and external auditor overlap, because external auditor, it is one of statutory auditor, which is it is one of his important duties to review the compliance with laws and regulations, for example income tax, GST, companies act, etc. Then the risk management. Risk management is one of the most important duties of internal auditor. And then the governance. So we'll see the example of each of these these objectives. No need to remember them in detail. Just remember the examples and the heading. That should be enough. So monitoring of internal controls, for example, monitoring through exception reports of continuous control management tool in ERP system. I hope this is not keyword mumbo jumbo for you. Continuous control management tool is nothing just so it is a system, it is a software which is put in your ERP system, which can throw exception reports. For example, you can configure the exception reports of payments above 10 lakh rupees without approval, if there is any possibility, or payment of more than $5 million with approvals, or export payments above certain amount, and so on and so forth. You can put in all permutations and combinations of exception reports that you want. Maybe like the employees who were absent but still claimed their travel expenses on the same date. So this could be one of the example of monitoring internal control, whether the employee reimbursement expenses are being fair or not. So first is monitoring of internal controls. Second is examination of financial and operating information. It's just what it says, for identifying reasons of year-to-year deviation in profit loss and account items, etc., etc. Then review of operating activities. Operating activities means review of various operations and how they are performing, whether they are effective in meeting their objectives, in their stated objectives, whether they are efficient, whether the resource utilization is optimum. So in this, what we have quoted is reviewing store management practices vis-a-vis industry's best practices. Then review of compliance with laws and regulations. For example, newly applicable tax regime, which could be GST or any other tax that becomes newly applicable, and with the existing with the existing laws and regulations as well. This is just an example. So risk management. Risk management could be evaluation and management of risk exposure for complex financial instrument transaction. For example, hedging a derivative or block or Maybe cryptocurrency, if the company is investing in cryptocurrency, whether it is safe or not, and how much hedge should be taken to cover the loss over there. And then the governance, assessment of governance process in the accomplishments of objectives on ethics and values. So this could be one of the examples of the indicative objectives of internal audit. So these are just indicative, these are not exhaustive as the name says, but you should remember at least these 6 indicative objectives for your examination purpose. And you can obviously put in your own examples. You don't need to memorize these examples and quote them in the exam, even if they are provided in the study material, but please make them relevant. So now the question arises, is internal audit a statutory requirement? Does any statute uh, does any statute mandate the applicability of internal audit? Of course, the Companies Act 2013, Section 138, following class of companies prescribed in Rule 13 of Companies Accounts Rules 2014. So before proceeding, I would like to say that please remember this section and this rule. It is very important. And remember this provision as well. Don't just remember the section and rule. So Section 138 of the Companies Act 2013, prescribed in Rule 13 of Companies Account Rules 2014, shall be required to appoint an internal auditor, which may be either individual or partnership firm or body corporate. So even a private limited can be an internal auditor, partnership firm, or an individual can be an internal auditor. So the Companies Act has adopted a liberal approach in the appointment of internal auditor in comparison to that of statutory auditor, because internal auditor could also specialize in certain areas in which statutory auditor would not generally have exposure in. So also it depends on the nature of business, that of which field the internal auditor will be required, and many companies appoint internal auditors of various different fields. So here we can see that every listed company is required to have an internal auditor. Every listed company, irrespective of the turnover, irrespective of the loan, deposits, etc., whatever the conditions are, every listed company must have an internal auditor. This is the requirement of Section 138 and Rule 14. Then every unlisted public company having, please, please remember these provisions very clearly, paid up share capital of 50 crore rupees or more during the preceding financial year. Paid up share capital of 50 crore rupees or more during the preceding financial year. Turnover of 200 crore rupees or more during the preceding financial year. So paid up share capital 50 crore, turnover 200 crore. Outstanding loans or borrowings from banks or public financial institutions. Please remember this, that not only banks, but from any public financial institution exceeding 100 crore rupees or more at any point of time during the preceding financial year. Outstanding deposits of 25 crore rupees or more at any point of time during the preceding financial year. If you read these 4 provisions carefully, you'll see that during the preceding financial year, any point of time during the preceding financial year, and during the preceding financial year. So these all mean that at any point of time in the preceding financial year, and this doesn't necessarily mean that at the end of on the closing of the last financial year. So if the paid up share capital reduces and the loans and borrowings reduces, deposits reduce on the closing date, it doesn't make any difference. If it has touched this level, then the internal audit becomes applicable on them. So every listed company and every unlisted public company having all these 4 conditions, one of these 4 conditions, sorry. So any of these need to be fulfilled. And then every private limited company having turnover of 200 crore rupees or more during the preceding financial year, outstanding loans or borrowings from banks or public financial institution more than 100 crore rupees at any point of time during the preceding financial year. So a good way to remember this is TLCD, turnover, loan, capital, deposit. Listed companies, it is always applicable. Unlisted public companies, 200, 150, 25. So this halves with every succeeding step. And private companies, only turnover and loan requirement are there, not capital and deposit. I hope this is clear. Section 138, Rule 13 of Companies Rules 2014. Individual, partnership, firm, body corporate, every listed company, every unlisted company, paid up share capital, turnover, outstanding loans and borrowings, outstanding deposits. So this is also the way how you should revise using these notes. Just read the bold parts and you should be sorted. Uh, so who can be appointed as an internal auditor? A chartered accountant or a cost accountant or such other professional as may be decided by the board to conduct an internal audit of the functions and activities of the company. Which section again? 138. So the internal auditor shall be either a chartered accountant or a cost accountant. So this has been specifically provided in the statute that CA or cost accountant, whether engaged in the practice or not. So please understand this, that he doesn't necessarily need to be in the practice, or such other professional as may be decided by the board. Which board? The board of directors, to conduct an internal audit of the functions and activities of the company. The internal audit may or may not be an employee of the company. The auditor may or may not be an employee of the company. So one must think that what about the audit independence if the employer-employee relationship exists. So we'll deal with it in the later part of this chapter. I've covered that. Then besides that, to be effective, the internal auditor must be regarded as the part of the management and not merely as an assistant thereto. So internal auditor is never an assistant to the management. He is a part of the management. Furthermore, he or she must have the authority to investigate every organizational activity to meet the objectives and scope of the internal audit. Only to meet the objectives and scope of the internal audit, the internal auditor can investigate every organizational activity. Then we'll come to the next slide. So we'll deal with some practice questions over here. ABC Limited, an unlisted company. ABC Limited means it's a public limited, had turnover of 98 crore rupees, paid up share capital of 40 crore, deposits of 26 crores on 30th March 2020, and of 24 crores on 31st March 2020. So we can see that the deposits have reduced from 26 crores to 24 crores on closing. Advise if the internal audit is applicable to the company. Since we have already discussed this, that outstanding deposits uh, at any point of time during the preceding financial year, and not just outstanding deposits, any of the criteria, if any of the criteria is fulfilled and the threshold is touched in the preceding financial year, then the internal audit becomes applicable. So yes, in this case, the internal audit is applicable even if the deposits have reduced on 31st March 2020. We'll move on to the next question. ABC Limited, an unlisted company, had turnover of 100 crore rupees, paid up share capital of 40 crore rupees, loan of 100 crores from Bank of India, and 25 crores from a director, and deposits of 24 crore rupees on 31st March 2020. Advice if the internal audit is applicable to the company. If it is applicable, can the company appoint its employees, Miss T, a cost accountant, as the internal auditor? So this is again an unlisted company. The public limited company had turnover of 100 crore rupees, but the limit for turnover is 200 for the internal audit to be applicable. Paid up capital of 40 crore rupees, paid up 50 crore is the limit over there. Loan of 100 crore from Bank of India and 25 crores from a director. Now this is little dicey. So what we read over there, loan exceeding 100 crore rupees, and here the loan is exceeding 100 crore rupees, but it is from a Bank of India and from a director, which is an individual. So but what we had to consider was the loan from bank or public financial institutions. Since loan from director is not from public financial institutions, so it will be not considered. Now we have loan of 100 crore rupees. So should the loan of 100 crore rupees meet the criteria of internal audit applicability or not? Let's revisit the provision. It is important to revisit it now. Outstanding loans or borrowings from banks or public financial institutions exceeding 100 crore rupees. It is exceeding 100 crore rupees, not 100 crore rupees or more. So here it will not be applicable. In this case, it will not be applicable. Where is the case? Yes. So in this case, it will not be applicable because here it is not exceeding 100 crore rupees from bank or public financial institution. The second part of this question is, can the company appoint its employee Ms. T, a cost accountant, as the internal auditor? As we have read over here, that yes, an employee can be made the internal auditor of the company, and we'll discuss about the independence in case of employer-employee relationship in the later part. But yes, for now, we can say that a cost accountant who is an employee can be appointed as the internal auditor. No issues with that. Then we have another question. PQR Private Limited Company has 40 lakhs paid up capital. So paid up capital threshold is not met. Also, in case of private limited company, please remember the criteria that we have. In case of private limited company, we have only turnover and loan as the criteria of 200 crore rupees and 100 crore rupees. Capital and deposit criteria are not there in case of private limited company. So PQR private limited company having 40 lakh paid up capital and 9.5 crore rupees reserves and turnover of last 3 consecutive financial years immediately preceding the financial year under audit being 49 crores, 145 crores, and 260 crores, but does not have any internal audit system. In the view of management, the internal audit system is not mandatory. Comment. So, since the turnover limit has breached and it has actually crossed the threshold limit, which is stated in section 138, so we can say that the internal audit requirement is applicable on the company. You need to answer this question in exams, please mention the section, then the rule, and then mention the provision which is over there. And then you say, yes, it is applicable because the threshold has been crossed. Now we'll come to the other topic. What is the responsibility of an internal auditor? Is internal auditor responsible for anything at all? And if he is, what are those responsibilities? So first of all, it is to maintain an adequate system of internal control. So wherever the internal auditor term is used, remember to use the internal control as well. This is a complementary term, and the basic duty of an internal auditor, as we have seen in the over here indicative objectives of internal audit as well, is to monitor the internal controls. So the basic duty of an internal auditor would be to maintain adequate system of internal control by a continuous examination of accounting procedures, receipts, and disbursements. It is a continuous examination, not a one-time activity. Please remember that internal audit is unlike statutory audit, which happens once in a year. Internal audit, on contrary, is a continuous process. And how it is a continuous process, we are going to deal with that in the later part of the chapter as well. And then by continuous examination of accounting procedures, receipts, and disbursements, and to provide adequate safeguards against misappropriation of assets. So adequate system of internal control on one hand, and the other hand, adequate safeguard against misappropriation of assets. Example, checking the adequacy of internal control for prompt cash sales recording and cash deposit to avoid misappropriation of cash at an outlet of a retail chain company. So in case of a retail chain company, if cash sales are recording promptly and if the cash is deposit, then we can say that internal controls are working adequately and the misappropriation of at least cash is being avoided. Then to operate independently of the accounting staff. So this has been underscored. The internal auditor has to maintain independence generally as well, but this is underscored that he has to maintain independence from the accounting staff as well, and must not in any way divest with any of the responsibilities placed upon him. So this is because of the nature of his job that this has been underscored that he should be independent of even the accounting staff. Example, avoiding being influenced by the relationship with the accounting staff in performance of duties despite the close interaction because of the nature of the job. Third is not to involve in the performance of executive functions. So whenever the internal auditor is an employee of the company, many a times he is also given some responsibility of executive functions. But it is the duty of an internal auditor to maintain his independence, and for that he needs to avoid the performance of executive functions in order to have an objective outlook and does not get obscured by the creation of vested interest. So just to maintain its independence and objectivity, the internal auditor, should not involve himself in the performance of executive functions. Example, job role should not involve overlooking account payable function, especially when involved in that function. So this will be a system, this will be a self-review, and it will defeat the maker-checker concept. Then to observe facts and situations and bring them to the notice of authorities who would otherwise never know them. Also critically appraise various policies of the management and draw its attention to any deficiencies wherever these require to be corrected. So I would like to point out one thing, that as I am reading out these slides, you must be thinking that this is very theoretical, and is there any way to learn them efficiently, to learn these provisions efficiently? Yes, there is a way to learn them efficiently, and I have prepared summaries of each of these big concepts, so you need not worry about them. You need not write them down right now. You can just see these notes, and you can then download it from the ICAI website, because I've prepared summaries of these notes as well, so that you can easily revise them, as I mentioned in the introduction of this slide as well. So now we'll come back to the topic: responsibilities of an internal auditor. A, to maintain an adequate system of internal control, adequate safeguards against misappropriation of assets. Then to operate independently of the accounting staff. Then to not involve in performance of executive functions. Then to observe facts and situations and bring them to the notice of authorities, and critically appraise various policies. Critically appraise various policies. Please remember this term: critically appraise of the management, and draw its attention to any deficiencies wherever these require to be corrected. For example, so this was an example that uh, I um I noticed in one of the audits, and it was like that gift policy to the staff was not getting accounting, and thereby not subject to income tax as required by the law. So, as you know, that by the income tax law, above a certain amount, if anything is paid to the employee as a gift, then it is required to be taxed. And it is required to be added as the perquisite in the salary of the in the taxable salary of the employee, but that was not getting subjected to income tax, and that was not even getting accounted. So this could be one of the critical appraisal of the policy of the gift policy of the management, that it is not in sync with the accounting and the taxation department. The second could be there can be no control deficiencies when the control itself is absent. Report that as well. So sometimes what happens is that if some control is utterly deficient, the management tends to say that we do not have any control over that. So don't forget to remember, don't forget to even don't forget to appraise the management of that control deficiency as well, that it doesn't even exist. So, in the next point is to associate closely with management and keep knowledge up to date by being informed about all important occurrences and events affecting the business, as well as the changes that are made in the business policies. So, you have to associate closely with the management and be informed about the occurrences and events affecting the business, especially in the tech related business, in which the events keep happening very frequently, and there are many business developments that keep happening, as well as the changes that are made in the business policies. Examples: staying informed and keeping the management aware of the data privacy best practices and lapses in the system being followed. At all times, the internal auditor must enjoy an independent status. So please remember this point, that independence has been used twice here in the responsibilities of an internal auditor, because of its utmost importance in the role of an internal auditor in discharging of his duties. So he must maintain independent status at all the times, especially with the accounting staff. This is also mentioned. Then to maintain adequate system of internal control, adequate safeguard against misappropriation of assets, not to involve himself in the performance of executive functions, critically appraise various policies, observe facts and situations, bring them notice to the authorities, associate closely with the management, and stay informed. That's all. These are the responsibilities of an internal auditor. So this is what I was talking about. I have prepared this slide so that you can have a quick revision, and then I've also prepared a silly acronym to remember these responsibilities. You may use them or you may not. It's up to you. But These revision notes are very important, so you can quickly glance through them when there is less when you have less time for the revision. So first is maintain an adequate system of internal control. I have not quoted the examples over here. You may refer the examples from the above slides. Adequate safeguards against misappropriation of assets to operate independently, including from accounting staff, not to involve in the performance of executive function. Critically appraise various policies, draw attention to deficiencies, then be informed about important occurrences and events affecting the business, changes in business policies. Acronym to remember is internal. I am a critical and informed executive. So this is a little silly acronym, but it works. Then threats to auditors' independence. What are the threats to auditors' independence? So this is just for understanding. No need to remember this. Uh, First is self-interest. Auditor could benefit from financial interest in the client. So, for example, being a shareholder, and if the wealth of the organization increases, the shareholder value increases. Also, it can induce him to follow some unethical business practices to just meet his own self-interest. Then advocacy, auditor promotes an audit client's position or opinion. So for example, if the auditor is also internal auditor is also appointed as the tax representative of the client, he would obviously advocate his own works, his own audits, his own reviews position. So that should not happen. Then ideally that should not happen. Familiarity, auditor becomes too friendly with client by working for client for a number of years. This I have encountered personally as well, that when the auditor and the auditee develop friendship, there obviously comes a vested interest, and there obviously comes some undue influence because of their friendly nature. Then self review, when the maker and checker is the same are the same person. So this I discussed above as well, where the internal auditor himself performs certain executive functions, and he is asked to review or audit those functions only. So why would he point out his own mistakes? Then the intimidation, auditor is subjected to intimidation of firing the auditor. This could be one of the intimidation in employer-employee relationship, and the others intimidation can also be there. Then what to do when the internal auditors are assigned operational activities? So this was the thing that I was I was discussing above, that what should we do when the internal auditors are assigned operational activities, and practical issues of independence when an employee is the internal auditor. So the internal auditor cannot refuse at all times, and he or she may have to accept some limited operational role with due approvals from the managers, etc., and for a short duration only. So it should not be a permanent responsibility. It should be for a short duration only after communicating his limitations. So this is very critical to remember, that the employee internal auditors should accept the executive functions only after communicating limitations. And what are the limitations? That they are unable to assume ownership or accountability of the process. So the complete ownership or accountability cannot be forced upon them. A. B. Inability to take operational decisions that may be subject to an internal audit later on. So this is against the maker checker concept, that they should not take any responsibility to which they will audit at the later stage. This will completely defeat the independence of the internal auditor. Example, the internal also one should also remember that internal auditor will often be asked for such helps because of his vast knowledge of the taxation, economics, accountancy, etc. But this is very important for an internal auditor to state these limitations. And when the internal auditor states these limitations, he is generally waived off these responsibilities. So, for example, the internal auditor may be asked to implement the GST SOP, standard operating procedures, because of his or her knowledge of the law. In such a case, the internal auditor should only accept the assignment for a short duration, which we have already discussed, and after communicating inability to assume ownership or accountability of the GST implementation process, and inability to implement the GST SOPs that may be subject to an internal audit later on, because in such a scenario, the maker and checker would be the same person. So please remember these 2 points: unable to assume ownership and inability to take operational decisions. Then we come to scope of internal auditing. So what we have discussed is the indicative objectives of internal auditing, responsibilities of an internal auditor. Now we'll discuss the scope of internal auditing. So these are the scope: accomplishment of goals and objectives, internal control system procedure, custodianship and safeguarding of assets, compliance with policies, plans, procedure, regulation, relevance and reliability of information, org structure, utilization of resources. So some of you might find that many things overlap between the scope and objective, and no need to worry about that. It is completely okay. And since I have provided you the summary slides as well, so you can quickly glance through them to learn and memorize these concepts. Uh, so we'll deal with them one by one. So first of all is the review of internal control system. So as I said, wherever the internal audit comes, the internal control system also comes. So the first scope of internal auditing is review of internal control system and procedures. So what he should see is the design and operational efficiency and effectiveness of internal control system to strengthen the overall internal control environment. So not just the operation, how it is operating, but also the design. So we'll discuss about the design on the later part of this chapter as well. But the design and operational efficiency and effectiveness must be checked. The objective to review is to minimize the overall internal audit risk. What is the internal audit risk? Inherent risk, control risk, and detection risk. I hope you remember this from the previous lectures of the related topic as well, that the overall internal audit risk is inherent risk, control risk, and detection risk. Remember these risks. Example, review of three-way matching internal control involves review of purchasing orders, and then GRN or SRN, and the invoices to ensure that the order quantity and intended goods have been received and invoiced accordingly. The failure of this internal control may lead to over-invoicing, overpayment, non-receipt, or under-receipt of goods, obviously. And then, as far as possible, the controls should be inbuilt in the operating functions if they are to be cost-effective. So the operating functions should be designed in the way that the controls are inbuilt over there. So for example, compulsory digital approval of payment maker as the payment approval matrix requires. Then review of internal control system and procedure, the same. Internal control system should be reviewed considering the limitations of internal control. Remember this as well, that cost benefit comparison, human errors, collusion, and abuse by process owners are the inherent limitations of internal control, and this should be considered while reviewing the internal control system. So for example, collusion of payment authorizer and payment maker to overpay a related party, or those charged with governance themselves overriding the internal controls with malified intention. So these are the limitations of internal control that will always be there. That is the reason that the internal auditor and the other auditors always provide the reasonable assurance and not the absolute assurance. So it should also be seen that whether controls were in use throughout the period of intended reliance. So please see that whether the internal control has been implemented on the 31st March of the preceding financial year of which you are auditing, or was it in use throughout the period, and if there was any suspension in the period of the use of internal control, please review those periods, especially because there are high chances that you would find some good audit findings over there, and you would find lapses of the processes, and actually appreciate the importance of internal controls in place. So for example, embezzling of cash, deposit, late payment penalty and interest, possible cash embezzlement during the period the cashier's position was vacant. So this was the first point, scope of internal control auditing, review of internal control system and procedures. Second is review of custodianship and safeguarding of assets. Verify the existence of the assets, whether the assets exist or not. And this is very important in case of intangible assets. For example, software. Understand that in case of software, you do not get any physical asset to verify. You only get some codes over emails. So you should verify their existence as well. Then review the segregation of duties, another very important concept. Then review the control system to ensure that all assets are accounted, and review the means used for safeguarding the assets. For example, against fire, improper and negligent activity, theft or illegal activities. He should review the control system for intangible assets. For example, the procedure related to credit control. Where an enterprise uses EDP equipment, the physical and system control and processing facilities, as well as on data storage, should be examined and tested. So, review of custodianship and safeguarding of assets. Remember the existence, segregation of duties, control systems, and then the control system for intangible assets. Please do not get daunted by these detailed scope. This is just for the understanding. What you have to memorize is the following slide I'll point out specifically for all of you. This is just for the understanding. Do not try to memorize right now over live class. Third is review of compliance with policies, plans, procedures, and regulations. So this is the review that actually the company has complied with all the policies, plans, procedure, regulations, so that operations are carried out in a coordinated manner. Then he should examine the system of periodical review of existing policies, particularly, especially when there is change in the method and nature of operations. Then evaluate the effectiveness of all of these and point out specific weaknesses and suggest remedial actions. So you are not supposed to just point out the weaknesses and let the management deal with it. You are also supposed to suggest the remedial actions. And now the responsibility of internal auditors also include to get that implemented by the management and track its implementation. Tracking we'll discuss later in the follow-up of the audit. Fourth is review of reliance and reliability of information. Wherever information is used, use the information system word. These are the keywords that go hand in hand. So review the information system to evaluate the reliance and reliability of financial and operating information, not just the financial information, but operating information as well. To management and to external agencies. External agencies are the same agencies that the stakeholders are that we discussed above. And examine the accuracy and reliability of financial and operational records and the usefulness of the reports vis-a-vis their cost. So cost benefit analysis, accuracy and reliability of financial information and operational records, then the reliability and integrity of these information. Fifth one is the review of the organization structure to ascertain whether the organization structure is in harmony with the objectives. So this is a design thing, and whether the design of organization structure is as per the is in harmony with the objectives of the organization. So this should be considered. Then activities of enterprises are grouped for managerial control, how they are grouped, and whether the responsibility and authority are in harmony and are balanced. Then there is whether the organizational chart, the responsibility structure, it's simple and economical, and no functions enjoys an undue dominance over the others. Then responsibilities of managerial staff at headquarters do not overlap. So the responsibilities should not overlap. These are very obvious points, but still these need to be remembered to get good marks in the exams. Then there should be satisfactory balance between the authority and responsibility. In the continuation only, the number of subordinates that an executive controls. So here the point is that the internal control should examine the reasonableness of the span of control. So it is about the strength and the unity of command. Unity of command means that each person reports only to one superior. Use this keyword in the exam if the need arises. Please do not use it unnecessarily. Then unity of command should be there. And wherever dual responsibilities cannot be avoided, the primary one should be specified, and the specific responsibility to each senior should be fixed. And this must be known to all the concerned people. And finally, he should evaluate the process of managerial development in the enterprise. Managerial development means leadership training and appraisal process of the employees and how their progressional chart in the company. So this is regarding the review of organization structure. Just remember the design concept, and if you can remember the design concept and keep an example of organization structure in your mind, you should be sorted for this point at least. So we have discussed 5 points over here, 5 scope points over here, and we'll come to the final 2. Review of utilization of resources. The internal auditor should check whether proper operating standards and norms have been established for measuring the economical and efficient use of resources. So, first of all, the operating standards should be there, that is, standard operating procedures should be there. And those standard operating procedures should have the criteria for measurement of economical and efficient use of resources. Then those SOPs should be detailed enough to be identified with specific operating responsibilities. What would be the responsibilities in case of those SOPs, and who would be the responsible for that? And basis that, we can also evaluate that person's performance. So SOPs should be detailed enough to be identifiable with the specific operating responsibilities and should be capable of being used by the operating personnel for monitoring and evaluating their own performance. Then the internal auditor should review the methods of establishing operating standards and norms. He should carefully examine the assumptions made while setting the standards so that they are appropriate and necessary. So this is again regarding the design, that whether these have been designed making the reasonable assumptions and whether those assumptions were necessary in creating those SOPs. Then, wherever there is divergence between actual performance and corresponding standard, reason may be considered, and identifying the facilities which are underutilized is an important function. So, as the name suggests, review of utilization of resources. This should be the first point that should come to your mind, whether anything is underutilized or not. Mention that, specify that. Then points about SOPs, their design, whether they are designed properly, whether they are detailed enough that the operating responsibilities have been fixed, and whether the personnel are fixed who are responsible for those activities. Then their evaluation criteria will be in correspondence to those standards that we are fixed. Then what are the assumptions that are being made, and then whether proper accounting standards are set, and whether the economy and efficiency has been considered or not. Simple points. Then review of accomplishment of goals and objectives. So this is a very macro thing. So whether the goals and objectives are clearly stated and attainable. The goal should not be to avoid bankruptcy only. It should be detailed, clearly stated, and attainable. The internal auditor should examine whether, to the extent possible, objectives are expressed in precise, quantifiable terms, both monetary and non-monetary terms. Non-monetary terms could be to minimize the customer complaints, as the latest ad of Airtel is going that they need 0 complaints. For that, they've stopped their customer care services. They've stopped picking up the phone. But anyway, budgeting forms an important part of such planning. This will ensure that plans anticipate the problem areas, and then there should be sufficient flexibility in the plans. So without flexibility, the plan will be very rigid, and rigid plans tend to fail. So the internal auditor should review the overall objectives of the enterprise to evaluate whether they are clearly stated, attainable, precise, quantifiable terms, budgeting flexibility. Again, I'll reiterate that I've bolded or underscored the keywords over here so that you can quickly glance through them and you don't need to revisit them again and again. Just read them twice at maximum, and after that you can just revisit these slides through the bold terms or the underscore terms. So these are the pointers to remember. So I was telling you all along about this, that you don't need to worry about so detailed explanations. Once you have read them, for revising or for summarizing all this, you just need to remember these 7 pointers to remember the scope of internal audit. Also, in various interviews, the interviewer asked, how would you conduct an internal audit? They will ask such vague questions, and you will come across such vague questions in your professional life all along, that how would you conduct internal audit? Mention these 7 points and you will be sorted. So internal control system, design and operation, efficiency, effectiveness, overall risk, and inbuilt control, limitation of IC. IC means internal control, period of suspension, related points. Then second is custodianship and safeguarding of assets, verify existence. SOD means segregation of duties, accounted, safeguarded, intangibles. Review of compliance with plans, policies, procedure, regulations, compliance, change in method of nature, evaluate effectiveness, weakness, and remedial action. Review of accomplishment of goals and objectives, so on and so forth. You can go through it on your own self. I don't need to revisit them again. Scope of internal auditing, example of frauds without segregation of duties. Please remember the concept of segregation of duties clearly. It would have been discussed in your other lectures of auditing. So segregation of duties means bifurcation of 4 functions: custody, record keeping, authorization, reconciliation. If these are segregated, then you need not worry about the segregation of duties. Then the examples of frauds are personal purchases. An employee can divert funds to buy goods or services on his own behalf. This is usually done by approving his own expense reports or supplier invoices. So if I am made responsible to approve uh, my own expenses, I'll buy a jet just right now. I'll just leave this lecture. Second is funds diversion, not recording the sale or customer invoice in the accounting system to hide diversion of the customer's payment. Then you can divert the funds. Then proper segregation of duty would prevent a single person from processing the customer invoice, receiving, entering, and depositing the payment, applying credit, and performing the bank reconciliation. So you would be thinking that this is very obvious internal control, which would be there in many companies, but you would be surprised to notice that how many companies fail on this internal control, and the segregation of duty concept is compromised in almost all the frauds in which employees have collusion. Then we'll discuss about the integrity, objectivity, and independence of internal auditor. The internal auditor shall be free from any undue influence. Please remember, please see the words that we are using over here. Shall be. It is not should be. The internal auditor shall be. This is a requirement. Shall be free from any undue influences which force him to deviate from the truth. Independence shall not be in the mind but also in appearance. Please remember this point as well. It should not just be in the mind but also in the appearance. Through the conduct of the internal auditor, whether formal or informal, he shall not project that his mind is not independent, not even jokingly, not in informal communication, and not in friendly conversations, that he would be uh, influenced by the auditee. You do not have to uh, comply with any undue influence, or because you don't have to succumb to any friendship to compromise your independence. That is your sacrosanct duty. And it is a non-negotiable duty for any auditor. The internal auditor shall be free from any undue influence which force him to deviate from the truth. The independence shall not be only in mind but also in appearance. From undue pressure or interference in establishing the scope of the assignments on the manner in which they are conducted and reported. So in scope, conduct and report, you shall be free from any undue influence or pressure. So the independence, what is the purpose of independence? This is not to be remembered, this is just for the explanation. The independence in fact and of appearance cements and restores the public trust in the auditing profession, not just the clients but bankers, prospective investors, government agencies, public confidence, and nation's image. Yes, nation's image all rely upon the independence of auditing profession. When the Enron fell in the US, so it did not just downgraded the image of those auditors of those companies, but also of the nation and the reliance on that nation. And because of globalization, if one big country goes down, the entire world suffers its repercussions. Then the example is, if the internal auditors fail to report the frauds and lack of internal controls in timely manner, too big to fail companies can fall down, taking shareholders' wealth, employees' jobs and pension funds, banks' assets, and even economies down for many years. Please remember this relationship for your conceptual clarity only. Then the independence of internal audit function as a whole, that is the department and the internal auditor within the organization, plays a large role in establishing the independence of the internal auditor. The overall organization structure of key personnel, the position and reporting of chief internal auditor within its structure, along with powers and authorities which is derived from superiors, further establishes the independence of the internal auditor. So I've bolded the keywords over here. You can go through them. So what it means is that the overall function, overall department should be independent, and that sets the independence of the internal auditor, who is the part of that function. And besides that, the organization structure and the position and reporting of chief internal auditor. Chief internal auditor is the head internal auditor, and Power and authorities which is derived from the superior. So how much superiors actually give importance to that chief internal auditor, his recommendations. So that goes a long way in defining the integrity, objectivity, and independence of the internal auditor. For example, in case of listed companies, the internal auditor may be required to report directly to those charged with governance, such as audit committee, instead of CEO or CFO. The internal auditor should immediately bring any actual or apparent conflict of interest to the attention of the appropriate level of management so that necessary corrective action may be taken. Excuse me. The internal auditor shall be honest, truthful, and shall be a person of high integrity, highly professional manner, and seen to be fair. He shall avoid all conflicts of interest and not seek to derive any undue personal benefit. So he should be honest, truthful, and have high integrity, highly professional, and seen to be fair. Avoid all conflicts of interest and not seek to derive any undue personal benefit or advantage from his position. The internal auditor shall conduct his work in highly objective manner. What does objective manner means? It means impartial manner. So, highly objective manner, especially in gathering and evaluation of facts and evidences. He shall not allow prejudices or bias to override his objectivity, especially in arriving at conclusion or reporting his opinion. The example is the same, the maker checker concept. So this is the integrity, objectivity, and independence of internal auditor. If a question comes that write a short note on integrity, objectivity, and independence, you shall write all of this. You may use some other examples as well. And just remember to use these keywords and what I have highlighted and summarized over here as well. Qualities of internal auditor. The internal auditor shall have special expertise necessary for evaluating management control system, especially financial and accounting control. So expertise necessary for control system, financial and accounting controls. Then accounting and financial expertise to be able to discharge his duties, because lot of the data that he will deal with will have to do with the accounts and finance. So he must have accounting and financial expertise as well. The previous point, the difference between the first and the second point is that the first point is regarding the control system, that he should be able to evaluate the financial and accounting control. So these are two different things, to know about account and finance and to know how to deal with the controls. Third is the operational performance and non-monitoring operating controls requires the basic knowledge of technology and commercial practices of the enterprises. So since the internal auditor is expected to evaluate not just the monetary things, but the non-monetary performance criteria as well, and the operational performance as well. So he should be well versed with the terminologies and the standard criteria and the business measurement criteria of that business. For example, I've quoted a very specialized example here intentionally. For example, for a digital business like e-commerce website, the knowledge of business metrics such as impressions, reach, engagement, email click-through rate, cost per acquisition, organic acquisitions, traffic, social media engagement, abandonment, etc., is required. And this will change according to the business entity that the auditor is auditing. And this will obviously depend upon the area of auditing, as if he's auditing the marketing area or if he's auditing the client acquisition, the sales area, the revenue area, whatever he's auditing. So this requires the specialized knowledge. So fourth is should have the basic knowledge of commerce, law, taxation, cost accounting, economics, quant method, and EDP, electronic data processing system. This should be the basic for him. Then understanding of management principles and techniques, because he may be required to evaluate the management decision as well and the organization structure, which we've already discussed. So should understand the management principles and techniques. And the sixth is the assurance. He should provide an assurance to the management that the confidentiality of information should be maintained. And how should he provide it? Not by writing, but by through his conduct. So through your demeanor, through your conduct, through your actions, you demonstrate that you are confident enough, that you have high integrity, that you will not divulge the information of the client to any third party. So these are the 6 qualities of an internal auditor that is required. Here I have summarized them again. Internal Audit Report Standard Standard of Internal Auditing 370. So we have discussed the requirements of internal auditor, qualities of internal auditor, objectives, scope. Now we'll discuss about the report. So it is dealt with the SIA Standard of Internal Auditing 370. This was published last year only in February in the compendium. And through this, the institute has set up the standard for the internal audit reporting. So here, what it says is that there are two stages of internal audit reporting at the end of a particular audit assignment, and on periodic basis. On periodic basis, it is generally on quarterly basis. So we'll go through them in detail. At the end of a periodic audit statement, internal audit report covering a specific area, function, or part of the entity is prepared. So whatever was the scope of the audit assignment, that audit only will be covered at the end of a particular audit assignment, highlighting key observations, the manner in which the assignment was conducted. Manner means audit methodology, sampling methodology, and sampling and key observations and the executive summary, etc., and the key findings. Then, on a periodic basis, a comprehensive report of all the internal audit activities. So, all the above, all the internal audit reports that point one mentioned for during a particular period, let's say a quarter, will be covered in this summary report. And this summary report is for more senior people who do not have time to go through each and every report in detail. So a comprehensive report of all the internal audit activities covering the entity and the plan period is prepared by the chief internal auditor. Please remember this responsibility is prepared by the chief internal auditor. Excuse me. And such reporting is normally done on a quarterly basis. Generally, and this is reported to the audit committee. Some part of the aforementioned internal audit report may form part of periodic report shared with the audit committee. So we can use some excerpts of the previous audit, of the detailed audit reports, to highlight your certain critical points, or you may use them as the annexures as well. So this is what is provided over here. So no format is defined of any internal audit report in standard internal auditing 370, unlike the format defined in the for the statutory audit report. On the basis of internal audit work completed, the internal auditor shall issue a clear, not ambiguous or contradictory statement, well documented. Well documented means sufficient and appropriate audit documents should support that. And what are the key elements of internal audit report? The objective, scope, and approach, the standards of internal audit, the fact that it has been conducted as per the standards of internal audit, executive summary, summary of corrective actions required, nature of assurance, if any. Nature of assurance, if any, please remember this point as well, if any, only. So whether we are saying that some of the controls are working effectively, and what are the basis of that assurance that we are giving to the management. Then the content and form of the internal report are to be established by the internal auditor. The content and form is only to be established by the internal auditor, and that can be done in the consultation with the auditee and inputs from the other stakeholders. No final form has been discussed. And then it shall be issued within a reasonable time frame from the completion of the internal audit work. So let's say 30 days, within 30 days it should be issued, but it is not mentioned over there. I'm just giving you a random number, a random reasonable number. Within those many days, the audit report must be issued to the auditee. So we'll deal with these provisions in details over here. So basis of internal audit report. Each internal audit report is prepared on the basis of the audit procedures conducted and analysis of audit evidence gathered. Conclusions reached shall be based on the findings rather than on a few deviations or issues noticed. So what this cartoon is saying, that half of the numbers are accurate. That's why we are auditing the remaining 56%. That means that we are making only the exceptions as our audit universe, which should not be done, which should never be done. Never exaggerate your observations and conclusions, and be reasonable with them. Second is the conduct in accordance with SIAs. You should acknowledge that these internal audits are done as per the standards on internal audits only when you can substantiate the same with supporting evidence and documentation. Then the content and format of internal audit report is not defined. But content, its sequence and importance can be decided by the professional judgment of the internal auditor. Drafting format can be made in consultation with the recipients, how they want that information, because ultimately they are going to be the users of your internal audit report. And the format of that report can be discussed with them, but what you are going to report, what will be the sequence of that report, and to which point you'll accord what importance, what level of importance, that you have to decide. That the auditee cannot have a say on that. Auditee can have say only on the format of the audit report. Then the copies of draft and final audit reports to be maintained appropriately, cross-reference to specific observation. So write down an observation, write down your process observation, and annex the specific transaction basis which you are making that observation. And if appropriate, management action plan may be countersigned by the respective management personnel. So take confirmation on them, on the management action plans, on the corrective actions only. And for example, LIFO-based stock valuation is being followed, resulting in inflating the stock value. Refer specific observation in next one. This is one of the examples of the observation. Follow-up. This is a very important point, and this is dealt by the Standard on Internal Auditing 390, monitoring and reporting of prior audit issues. So the chief internal auditor is responsible for continuously monitoring the closure of prior audit issues through timely implementation of action plans, including past audits. So if the action plan was, some action plan was decided with the management in the past audit, so you have to maintain a tracker. In maybe an illustrative example could be this action taken plan report. And basis this, you have to see whether the management has implemented those recommendations or not. And if they have not implemented those recommendations, what are the reasons for that? And if they have implemented, whether it is satisfactory and as per the intended as it was intended by your recommendations or not. So that has to be checked. And how do you track it? Through action taken report, and responsibility to implement the agreed action plans, obviously with the management. You don't need to quote this SIA word to word. Just remember and understand the keywords and understand the concepts that this standard on internal auditing is providing you. So follow-up is, so there are these steps to the audit: scoping, planning, conducting, reporting, follow-up. Follow-up is a very important part, because without follow-up, management may tend to just forget about your recommendations, and your internal, all the audit efforts may go in vain. So here what we are saying is, if no action is taken within reasonable time, he should draw management's attention to it. If they have not acted upon his suggestions or not implemented his recommendations, then ascertain the reasons thereof, and where the management has accepted and initiated the necessary action, periodically review the manner and extent of implementation, and report to management highlighting the recommendations. So this is the follow-up summary for revision. No action within a reasonable time, draw the management's attention to it. Action taken but not appropriate or sufficient as recommended, ascertain the reasons thereof, and initiated the necessary action, periodically review the manner and extent of implementation of those recommendations. And in all cases, in every case, report to the management highlighting the recommendations which have not been implemented fully or partly. So if a question comes asking you to give a short note on the follow-up of the internal audit, you should mention the standard on internal audit 390. And this is what the provision says. You don't need to copy the word-to-word standard. You can copy you can just explain the provision using the key terms, and then you can you can write this summary as well over there, and then you can give some example and maybe a format of this action taken report. But this is not required. This is not in the syllabus. This is not in action taken report. The format is not in the syllabus, not in study material. This will be just for some brownie points, nothing else. And if you're running short of time, please ignore it completely. Then the relationship between external auditor and internal auditor. See, this is a statutory requirement that the external auditor has to evaluate the work done by the internal auditor. And as we have seen in the above discussion as well, that a lot of responsibilities overlap between the work of between that of internal auditor and the external auditor. External auditor means statutory auditor over here. So we'll deal with this. We'll deal with this relationship in short over here, in detail over here rather, and then in short in the summary slide that I prepared. So the internal auditor operates in various areas such as review of the accounting system and internal control. So what we are discussing over here is the overlapping thing. The review of accounting system and internal control. For example, internal control for procurement and minimum price from reliable supply, etc. Examination of financial and operating information for the benefit of management, for example, IT security. Then the examination of economy, efficiency, and effectiveness of operations, including non-financial controls of various tangible assets. You can see the example, root cause analysis of idle man hours, unutilization of expensive machinery. Then there is a lot of overlap between the work of internal auditor and external auditor, and the function of an internal auditor is an integral part of the system of internal control. This is a very important point to understand, that internal control system itself includes the internal auditor, the internal audit, and the functions of internal auditor. Then it is obligatory for a statutory auditor, as I mentioned, to examine the scope and effectiveness of the work carried out by the internal auditor. Examine the internal audit department, the strength as in number of the internal audit staff, their qualification and their powers. So whether the work of internal auditor is good enough and whether it can be relied upon. So the scope and effectiveness. Second is the extent of independence exhibited by the internal auditor in discharge of his duties, and his status in the organization are important factors for determining the effectiveness of this audit. The external auditor should evaluate the internal audit function to the extent he considers it will be relevant in determining nature, timing, and extent of his compliance and substantive procedures. So, basis his overall evaluation of the internal audit department, the external auditor determines the nature, timing, and extent of his procedures. So, if he decides in favor of the internal audit department that they work independently, they were effective, they have good status and power in the organization, their recommendations were implemented by the management, so they will carry out, the statutory auditor will carry out less extensive procedures. On contrary, they will carry out the more extensive procedures to evaluate the even the findings of the internal audit lapses. So this is the summary of relationship, and this should cover your above two slides. And the internal audit reviews internal controls, accounts, operating and financial information. Briefly mention the overlapping scope. You know that very well by now. Lot of overlap between internal and external audit. Mention that. Then the obligatory for statutory auditor to examine internal audit with respect to scope, effectiveness, to check this, to check independence and status, to check the effectiveness, check independence and status, strength, power, qualification and power, and evaluate above to determine nature, timing, and extent of compliance and substantive procedure. Basis the above determine extensive procedure required or not, whatever we discussed. Difference between internal auditor and external auditor. This is very simple. You can go through it by yourself. So I'll quickly glance through. Ongoing audit function, internal audit. External audit is the independent body, that is statutory audit. Examination, operational efficiency is also included, whereas accuracy and validity of financial information, which is true and fair view. Appointed by the management, appointed by the members. Who are the members? Shareholders. And users of report, management is the user of report of the internal audit, and external audit, all the stakeholders, including government and employees and vendors, everyone. Period, continuous process, once in a year. Statutory audit is done once in a year. Internal audit is a continuous process, as I discussed. Opinion, effectiveness of the operational activities of the company. And the opinion is provided here, the external audit, the opinion is provided on the truthfulness and fairness of the financial statements only. And status of the auditor could be an employee, but mandatorily not an employee. Then we come using the work of an internal auditor. This is what to be checked when using the work of an internal auditor. By whom? By the statutory auditor. So determining the nature, timing, and extent of work of audit function that can be used, not the timing, sorry. So determining the nature and extent of work of internal audit function that can be used. The external auditor shall consider the nature and scope of work done and its relevance to overall strategy and audit plan. If the external auditor has to use the work of an internal auditor, he has to he has to check these points, and if these points are checked, then he can actually use the work of internal auditor in conducting his own responsibilities as statutory auditor. However, if any of these conditions is breached, he will not consider the work of internal auditor in carrying out his own duties. So, in determining the nature and extent of work of internal audit function that can be used, determine adequacy of internal audit work for external audit purpose. The auditor shall see the objectivity of the internal audit functions. Objectivity means, I'll reiterate, impartiality of the internal audit functions. Level of competence of internal audit function. How will you evaluate the competence? Through skills. What are the qualifications? What are the professional experience? And whether a systematic and disciplined approach is used, including quality control. So whether consistent approach is being used, whether a disciplined approach and systematic approach is being used, and whether there is any system of quality control in the internal audit department of the organization. So if the external auditor determines that the functions, organization status, and relevant policy procedures do not adequately support the objectivity, so either the objectivity is not being met, or it lacks the sufficient competence, or does not apply a systematic and disciplined approach, then the external auditor shall not use the work of the internal auditor. Please underscore the word shall, and this is the requirement of standard on auditing 610. So this is what to be checked. These are the three things that have to be checked: objectivity, competence, systematic and disciplined approach, including quality control. Question is, state the factors that weigh considerations in opting to make use of direct assistance of the internal auditors for the purpose of statutory audit. So in using the direct assistance, we shall use this slide. This is what to be checked, and this is how to be checked. So how would you evaluate the objectivity, competence, and systematic and disciplined approach of the internal auditor? These are the four things that need to be checked. Organizational status. So to check the organization status, if IA is being done by please determine that if IA is being done by an outside agency or by an internal audit department. Whether the internal audit department reports to the highest level of management and are free of any other operating responsibilities. So this is what we have earlier discussed as well, whether the maker and checker concept is being followed, whether any constraints or restrictions on their functions, and whether they are free to communicate fully with the external auditor. Second is scope of function, nature and depth of coverage, and to what extent management acts upon their recommendations. So this actually gives the respect to the internal auditor, whether they are in the company, whether they are part of the management, or whether they are outside agencies. The nature of respect and the nature of importance that the management gives to the internal auditor is determined by the extent the management acts upon their recommendations. Then the technical competence, technical training and proficiency, experience and qualifications of IA personnel, and due professional care, whether planned, supervised, reviewed, and documented. So you can ask for their audit documents as well. For example, the existence of adequate audit manuals, audit programs, working papers, and whether any quality control mechanisms exist in the IA function. What is IA function? IA function is nothing but the department in the organization, internal audit department. So this is what to be checked while using the work of an internal auditor, before using the work of an internal auditor, and this is how it is to be checked. So a question may come, state the important aspects to be considered by an external auditor in the evaluation of internal audit function. So these are the four things how you will check these objectivity, competence, and quality control. Then we'll come to next question. So this was just regarding the using the work of the internal auditor. But now the question comes, whether the statutory auditor can take assistance from the internal auditor, whether they can ask them for some help, and if yes, what are the conditions that need to be fulfilled before taking such assistance, and what are the documentation requirements of such assistance. This is the relevant case question, just reiterating the questions that we have discussed. So yes, statutory auditor can use the work of an internal auditor, and but Can statutory auditor use the work of internal auditor in all the cases? Can he use the internal auditor to determine, to make significant judgments in the audit and in relation to decisions that the external auditor makes in accordance with standard auditing 610, or regarding the matters that are to be reported to those charged with governance? No, he cannot. So we'll discuss the exception list, what the external auditor cannot take help for from the internal auditor, and the remaining things can be in the remaining responsibilities, the assistance can be taken. So the external auditor shall not use internal auditors to provide direct assistance to perform procedures in which making significant judgments in the audit is required. So you will not ask the internal auditor to make significant judgments on your behalf, then which relate to higher assessed risk of material misstatement. If you have assessed that the risk of material misstatement is high in specific areas, that you will not take direct assistance from the internal auditor. Then relate to work which is reported to the management or those charged with governance by internal audit function. So this is regarding the work which is to be reported directly to the management or those charged with governance by the internal audit function. So this will be, again, if you'll ask them to take direct assistance in the work which they have done, that will defeat the independence, and which relate to the decisions the EA makes in accordance with the SA 610. So you cannot ask them to take this decision as well. So where we can take your assistance or not. So these are the 4 exceptions, and except this, except this, you can take direct assistance from the internal auditor, but while taking, you should make judgment with respect to planning and performing relevant audit procedure, evaluation of the audit evidence gathered, assess risk of material misstatement, and evaluation of existence and significance of threats. So you will consider these points, and while considering these points, you will not delegate these 4 responsibilities that I have mentioned: making significant judgments, higher assessed risk items, and relate to work which is reported to management or those started with governance by IA functions, so their own work. And 4th is relate to this decision. And if the external auditor, using this criteria, determines that he will take the assistance from the internal auditors, he shall include in the audit documentation the evaluation of existence and significance of threats to the objectivity of internal auditor and the level of competence of the internal auditors used to provide direct assistance. So you will record the evaluation of existence and significance of threats and the level of competence, the basis of their decision regarding the nature and extent. So you will document the basis of the decision as well. For example, corrective action implementation sign off from the management on internal audit report, along with the field results complying with such implementation. So you will see that whether the management has implemented their significant audit findings, and you will conduct field studies to verify the same. And if you come to this conclusion, yes, they have good status and good respect in the organization, and their recommendations are implemented by the management, then you can record that basis for decision. Third is who reviewed the work performed and the date and extent of that review. So not only you can take the direct assistance, but it is your responsibility to review that work as well. So you cannot exempt the work performed by internal auditor from the review as it is required by the various standards on auditing. Then the written agreement should be obtained from an authorized representative of the entity. And the working papers prepared by the internal auditors can be used. And whenever they provide direct assistance to you, you must retain the copy of the working papers of the work done by them. So we'll take a break of 5 minutes. I hope that's fine with you. And we'll reconvene this at 8:38. All right. All right. I hope it's visible now. So, all right. So we've been getting queries from Sumit Jain and Chavi and Harshad Bashani. So these are some very interesting queries. So I'll respond to them one by one. So Sumit asked whether internal controls helps in achieving corporate governance. Yes, Sumit, it does. Corporate governance, and to answer your second question as well, yes, corporate governance is much broader concept than the internal or internal controls, and it is even the broader concept than the internal audit. It's not just the internal controls, because the ethical points are also considered in the governance, and it relates to the your accountability to all the stakeholders and not just the management, which is the stakeholder, which is generally the stakeholder of the internal audit reports. Then Harshad asks, sir, does management include employees of the company? Yes, of course, management includes employees of the company. Rather, um, all the management is it consists of only employees. Then, yes, does deposit refer to the deposit that the company has accepted? Yes, only that. Uh, Harshad says, but sir, independence will not be there if employees internal auditor. So, Harshad, your point is right that independence will not be as much as it would be when the external auditors are appointed, but still there will be some level of independence that will be provided to the internal auditor, and that only depends on the status that an internal auditor enjoys in an organization and the conduct that he follows. And in cases where there will be some independence issues, we have dealt with them, that where the internal auditor has to state some inability to take the process control, and inability to head the entire function, and then review his own work done. So through those means, the internal auditor can secure his independence. So we'll move on to the next topic. So what we have covered until now is using the work of an internal auditor. The next topic is management and operational audit. So the name of this chapter, I'll reiterate, is operational audit, management audit, and internal auditing. We have done with the internal auditing. Now we'll discuss the management and operational audit. So, what is management audit? As the name states, it's very simple. The effectiveness of the managers, their strategies, and their decisions, the policies and plans established by them, and how all of these come together to meet the goals and objectives of an organization. So, here we'll review the decisions and effectiveness of the managers. Operational audit, as the name suggests, of the operations only, and the deep analysis of operations. And operations could be various type of operations, and some at some places there will be some specialized operations. For example, if you ask me to evaluate the quality of some chemicals, I might not be able to do that, and for that I'll need a technical specialist. So in operational audit, we have to make use of some technical specialists as well, to make some sense of the audit and to carry out the audit. And so what is that? What is the meaning as stated here? A deep analysis of operations to bring out the improvement plan with respect to its overall standard of operation, including improvement in effectiveness, efficiencies, cost benefit, and the objective of the operations, that of the organization. So we have to see what are the SOPs and what are the objective of those SOPs, whether they are being met, whether there is any divergence, what are the cost benefit analysis, what are the benefits that we are getting by incurring that much of cost through the operations, and whether the objective of not just the operations but the organization are being met through the conduct of that operation. Also, one more point I would like to point out here, that management audit and operational audit sometimes overlap in their scope and activities. So, to avoid duplication for this purpose, expression management and operational audit may acceptable as management audit. So management audit is broader in scope in comparison to operational audit, and it may include the operational audit as well. So wherever there the clear distinction is not available, you may say that management audit includes operational audit here. but there are some differences, as I've discussed, that in the management audit, we are auditing the quality of managing, since it is about the managers. And on the operational audit, we are discussing about the quality of operations. Management audit is the audit of management. You are actually going to audit the top level management and their decision, their strategic decision, whether those are in compliance with the objectives of the organization, their mission statement, their goal statement. And while the operational audit is the audit for the management, since the operational audit reports are presented to the management, so it is for the management and not of the management. The focus of management audit is on the quality of decision making. So, for example, audit of the employee appraisal policies adopted by the management to meet the objective of securing a top position in the most preferred employer list to attract the most talented resource pool. So you might be asked to audit the employee appraisal policies, because that is the management's decision to be the most preferred employer. And the second example could be audit of whether any reporting manager has breached annual appraisal policy in the latest appraisal cycle. So the question is, which one of this is management audit and which one of this is the operational audit? You may answer it right now. Whether A is management audit or operational audit, please answer. No. It's not. It's not. The first example is not operational audit. It is the management audit, because we are discussing about the management decision, and the second is the implementation of the operation of the operations decision, and this is the operational audit. So then we'll come to the next point. The basic difference between the two audits then is not in the method, but in the level of appraisal. What are we actually appraising ourselves with? So the first one deals with to test the level of top management, its formulation of objective plan and policy decision making, and not just verifies the operations of control and procedure. So this we have already discussed. So case study, Messrs. ABC and Company Chartered Accountants have been approached by PQR Limited, a company engaged in iron and steel manufacturing. The company has been facing following operational issues. Penal interest for delayed payment to the overseas vendor despite having enough cash flows. So they have cash flows, but still they are paying penal interest for delayed payment. Second, despite having regular production and enough inventory, delays in shipping the final goods to the customers, leading to the deteriorating vendor rating. So what we can see over here is that they have the resources, but they are unable to have good hands around them, hands around the operations. So as a partner of Messrs. ABC and Company, through detailed discussion with senior manager, you have concluded that these are because of long decision-making cycles in the company. As a consultant to the company, would you recommend management audit or operational audit? So since we have concluded on the basis of discussion that this is because of the long decision-making cycles in the company, so the problem lies not in the effectiveness of operation, but in the decision-making process. And the decision-making process deals with the management audit. So we'll recommend the management audit over here. What if you had initially concluded that the delays was because of the presence of faulty departmental procedures? So not the decisions, but the procedures are faulty and the departmental procedures are faulty. In this case, we'll definitely recommend operational audit. I hope this is clear. If you have any doubts on this, please send the query ahead. Then we'll come to the second case study. So Messrs. SA and Associates, chartered accountants, have been approached by ABC Limited, ABC Data Solutions Limited, a company engaged in data consultancy services. The company is facing following problems. Letter of undertaking for claiming exempted export is not being accepted by the GST department for lack of various documents, leading to blockage of funds because company has to raise invoices inclusive of GST and then claim its refund. So the company is facing cash problems because the department is sending them notices for the lack of various documents when they are applying for LUT. Okay. Second is the company is failing to retain the best software engineer professionals and have to incur high HR consultant cost every year. Okay. So would you recommend management audit or operational audit on prima facie facts? Which level of management or operational audit would you keep in the scope of the audit? Okay. Would you answer this? Would you answer this? Any of you may answer this. Whether the operational audit will be recommended or the management audit will be recommended, and in which department or what would be the scope of the management audit? No. So someone has answered that in case A, the management audit will be recommended, and in case B, operational audit will be recommended. No. If you see the first, if you see the second case, the company is failing to retain the best software engineer professionals and have to incur high HR consultant cost every year. So here, uh, operational audit will be recommended because this seems to be the lack of HR department in retaining the best software professionals, and in the first case, letter of undertaking for claiming. So we are not actually submitting the document. So this is not regarding some decision management decisions. This is regarding the skills and competence of that department, of that a legal department which is not submitting the proper documents. So again, operational audit will be recommended in both the cases, not the management audit. So we can move on to the next slide now. The PQR Limited has come across many instances where it could buy products at lesser cost than the actual procurement price. Okay. The management believes that the adequate purchase policy is in place, including the requirements of 3 quotations from registered vendor, appropriate vendor vetting and rating mechanism. However, on-ground implementation of the purchase policy might be defective. Further, it has observed that there might be some employees involved in choosing the higher cost vendors as well. The company approaches you to advise the type of audit it should get done, management or operational. Please advise through a comparison between both the auditors. So first of all, we can provide the comparison as we have discussed in the previous slide, difference between management and operational audit. And then what would you recommend over here? Since it is not regarding the management decision, and management is itself saying that this is because of the poor implementation, there might be some fraudulent employees in the company, then we'll have to address this with the operational audit only. Then knowledge essential for the management auditor. So these are the points where these are the summary points for the knowledge essential for the management auditors, which you should know and know them in detail. So the first is the purpose of the organization, for which purpose the organization has been made. For example, if it is an NGO or profit-making organization, and uh, and so on and so forth. And second is the management structure, including DOA, delegation of authority. So what is the management structure, including DOA, planning and budgeting? Third is the reports required for the management and reports actually received. Fourth are the internal controls. Fifth, nature of production, flow of functions leading to production and their mutual relationships. Since the management auditors covers a very wide variety of the audit for the management, therefore, for each of these functions, the basic knowledge of these functions is required. And so, first of all, we'll start with the very macro level purpose of management structure, purpose of the organization, management structure, reports required, internal control. Then we'll come to the production, the nature of production. What is the nature of the production, and if it is seasonal, if it is throughout the year, and flow of functions related to production, what are the steps to that production and their mutual relationship. Then techniques, formulas, raw material, personal requirement for production. This is self-explanatory. Production planning, factory layout, design and installed capacity, self-explanatory again. Personal policy and management, what are the requirements of the personnel, what are the technical skills required, etc. Training, what are the training that needs to be provided, and what is the prerequisite training before hiring the personnel. Welfare, incentives and disincentives, what are you doing for the welfare of the employees, what are the incentives for them to work better and harder, and what are the disincentives for them. This is very important to know what are the incentives and disincentives, because that would form the basis of your recommendations. 10th is material management, simple points: sources, quality, quantity, storage, supervision, safety, insurance, issue procedures, sales management and sales planning, including advertising policy. So you don't need the detailed understanding of all these processes, but you need a basic understanding and a specialization in one or two areas. For example, finance area, cost accounting area, or maybe in internal controls. Then decision making process, this is very important because you are a management auditor, so you must understand the decision making process and management concepts. Books and records, including cost accounting records, cost accounting system, financial accounting policies. Then financial management of the organization. So these are the knowledge points essential for the management auditor. We go to the next slide. Reasons and benefit of management auditor. Management audit. So why should we get the management audit done? And the reasons are uh, for detecting and overcoming current managerial deficiencies. So if we identify that there are some managerial deficiencies, uh, if there are some managerial deficiencies and we have detected them, then to overcome those deficiencies, we need to have a management audit. Then the management evaluation criteria, it's not just the for the overcoming of certain weaknesses or deficiencies, but it is also the way through which you evaluate the performance of the management. So how well the management is doing, whether the organizational objectives are being met, whether they are effective in planning, organizing, directing, controlling, and coordinating. These are the key terms for your kind information, and the underscore terms and the bold terms are key terms, and you should remember them and reproduce them in your examination copies as well to get good marks. Because for the lack of these key terms only, your marks are deducted, and it is always a step marking, and it is based on keywords only. So please remember to use these keywords in your preparation. And so effective management is in planning, organizing, directing, controlling, coordinating, and whether the organizational objectives are being met. So it is not just for the overcoming deficiencies, but also to evaluate the performance of the management. Then in the management audit, one very important management audit tool is used, which is called management audit questionnaire. And the management audit questionnaire is in itself a uh, very important management tool, and which forms the part of this management audit. So this is one of the other reasons uh, of the reasons and benefits of the management audit, that you come across management audit questionnaire. Otherwise, who will question the management if not the auditor? And the board of directors are generally concerned with only the macro level questions, so they would not question them on day to day activities. Only the management auditor will. So this management audit questionnaire serves an important management tool. Then another reason is operating activity issues. The managerial problems and related operational difficulties can be spotted before the fact. So this is of the preventive nature, and if in preventive nature, if you can detect the deficiencies before it occurs, so you can actually control the cost leakages and control the frauds in time. Management auditing is helpful in case of ailing industries to isolate the problems and account for their ailments. Self-explanatory. And before financing from the government or from the financial institutions, or before investing, generally the management audit is done to evaluate whether their funds are secured and whether the proper returns on investment will be derived from that investment or not. And not just investing, but for mergers, acquisition, and before any strategic level decision. So these are the reasons and benefits of the management audit. So these are, I've summarized this in this summary slide, and you can quickly go through this slide, and you can have this deck from the ICAI website, so that you can revise from this slide at the time of your exam. And this should serve a brief summary. Detecting, overcoming managerial deficiencies, management evaluation criteria, how well in meeting organizational objective, how effective in planning, organizing, directing, controlling, coordinating, how appropriate decision for organization objective. Management audit questionnaires, preventive nature, management of problems and operational difficulties. ailing industries, isolate problems that account for their ailments, pre-finance audit and pre-investing audits. These are the brief reasons and benefits of management audit. Question can come on this as well, that in the form of a short note or in the form of a case study, that a company's contemplating with the whether they should get management audit or not, as the prospective management auditor explain to them the reasons that why they should hire you or why the management audit should be done in the case. Then organizing and conducting a management audit. Till now, we have discussed the meaning of management audit, the meaning of operational audit. Then we discussed the qualities of management auditor. Then we discussed the knowledge that a management auditor must possess. Now we'll discuss about the conducting and organizing a management audit. So first point is the organizing a management audit. So what should we have over here is there are 6 elements to that: statement of policy, constitution and independence, allocation of personnel, staff training program, time and other aspects, frequency. Who will organize a management audit? The management. It is up to the management to organize these audits. And what should be the prerequisite of organizing these management audits? These are the elements that are the prerequisites for organizing a successful management audit in the organization. See, here they are saying devising the statement of policy. This is the summary of organizing a management audit. We'll come to that later. First, we'll discuss with these in detail. So, a statement of policy, this should be prepared by the management, and the management support should be reflected in that. So, what is the reason of this statement of policy in management audit, but there is no statement of policy in internal audit? Why is it so? Can anyone answer? Why do we require statement of policy in case of management audit, but not in case of internal audit? I'm looking at the answers. You can provide it right now. No, Sumit, there are no provisions regarding the management audit. So I'm looking at the answer. Does anyone have any answer to this? That why do we require devising the statement of policy in case of management audit, but not in case of the internal audit? So I'll answer that. I'll answer this. I haven't got any satisfactory answer over here. So the reason is that the internal audit requirement is stated in the statute itself, whereas the management audit is at the discretion of the management. That's why we require the statement of policy to authorize the management to authorize the management auditors to have this position. The stature of the stature of internal auditor and external auditor, their roles and responsibilities, and are by and large either provided in the statute or the guidance is provided in the statute, which serves as the broader framework for their operations. But for management audit, the management needs to specify that in their policy document, which is their internal policy document. So what we are saying is that it should be categorically in the company's highest policy statement, and it should not be and it should not be in some random policy document, or it should not seem that the management is not according the proper respect and authority to the management auditor. That's why it should be there in the highest policy statement of the company. And the second is the statement of policy should spell out clearly the scope and status of the management auditing within the enterprise, its authority, issue reports, make recommendations, and evaluate corrective action plans, so that tomorrow no one stands up and question the authority of the management auditor. The company policy should itself establish the scope there, and they should establish their authority to carry out reports, to issue reports, to make recommendations, to evaluate corrective action plan. The statement must categorically say that the management auditor is capable of reviewing admin and management controls over any activity of the company. The control should be as liberal as possible. This is regarding the devising the statement of policy. Then constitution and independence of audit function within the organization. So let me reiterate, someone has asked this question in the question box, that whether they have to copy the exact provisions and the exact study material content. I am reiterating it maybe the third time, that you don't need to copy the exact provisions from the standards, from the study material. You don't need to copy the same, you don't need to cram it all. At the final level, what we are expecting is the understanding level that you gain and the conceptual clarity that you gain from these lectures, from your study material, from your knowledge. It is about the application. So you should focus more on the keywords, on the key concepts, and also on the practical examples that you quote over there. So please focus on that. Do not waste your time on cramming these concepts. But remember these bold words and the keywords that you find, the important words, the important concepts that you find in the study material, and practice the questions as much as possible. That will give you such a uh, such such a clear understanding of the concepts that have been discussed, and you don't need to refer any other material, any other study material, any other private coaching book. Only study material is sufficient to secure you good marks in the examination, in the CA examination. Please understand that this is the examination of chartered accountancy course, not some private company course, not some private coaching exam. So please refer to the study material that the institute issues, and you don't need to refer any other thing. Second point is in organizing a management audit. So first point is devising the statement of policy. Second point is constitution and independence of audit function within the organization. So some organization, depend upon the size, have established a separate department of audit specialists, where the head of department reports directly to the top executive. So there could be a separate department, and the management audit group may be a part of the activities of management service department. So management auditor may be the executive as well. So they may not be just dealing with the auditing functions, but they could be a group of personnel from different service departments of the management. Third is the function should be as independent as possible of pressure from various groups in the enterprise. So the independence should be secured. Allocation of personnel, who should be allocated, who have good auditing theory. So these are all the knowledge points that we have already discussed, that the management auditor should possess. So if these criteria is met, you can allocate that personnel to the organizing a management audit. Then staff training program, a continuous training program of the auditors. This is not regarding the other employees, this is regarding the auditors. A continuous training program of the auditors should be established and implemented to achieve the quality in performing audit assignments. Secondly, additional responsibilities and advancements can be given to the employees. And third, this is also incentive for drawing capable people who are keen to learn the new auditing concepts and who are keen to apply their knowledge on field in real time basis. So this a continual staff training program should be there. Time and other aspects. So time and cost will vary for each assignment depending upon the nature of the assignment, number of auditors, and number of specialists taken on board. So these are the time and other aspects that should be considered. And then the frequency of the management audit. So there is no frequency defined in any statute for the management audit. Frequency may vary according to size, structure, need, nature, and objective of the organization, according to the tech environment as well. So if the company is in fast changing industry, where there's great accent of the latest technology in the company's products or services, a rapid, frequent management audit is required, and in no case should the interval be allowed to exceed 3 years. So not more than 3 years should be uh, it should pass between two management audits. So this is the guideline of organizing a management audit. Now we can quickly glance through the summary slide that we have prepared over here. So devising the statement of policy. first step is that in summarizing or in organizing a management audit, I'm just reading the slide. In organizing a management audit, the first step is devising the statement of policy and what does it require. Clear and specific management support in highest policy document. Highest policy document, underscore that. Scope, status, authority, including issuing reports, making recommendation, evaluating corrective action plan should be clearly spelled out in the policy. Even the authority, even the status, and even the scope should be clearly spelled out in the policy. Provide capability of reviewing any admin and management control in the company. So this is actually the empowering provision that should be there. Second is constitution and independence of audit, as independent as possible, even if a part of other service departments. In one line, as independent as possible, even if a part of other service department. Third, allocation of personnel. Brief of knowledge as discussed above, as we have discussed above, the knowledge of that a management auditor should have. Plus, the additional point is imaginative, pragmatic, inquisitive. This should be included in the above slide as well. Please do not understand that in the previous slide he should not be. He should be devoid of imagination. He should have imagination over there as well. Fourth is staff training program, continuous training of auditors. Please do not confuse this with the continuous training of the employees. This is about the continuous training of auditors. There is only one topic which discusses with the continuous training of auditors, and it is in the management audit topic. Work as an incentive improves quality, attracts resource talent pool. Time and cost aspect. See, so I'll give you an example. So over here, I have changed the words, but the intent of those provision is same. So you can do similar thing in the exams as well, and you do not need to copy word to word from the study material. You just need to provide the intent to the examiner, and the marks will be given to you. Time and cost aspect decide as per the requirement, including strength and skill set required, frequency, size, structure, nature, objective, technical, technological changes, and in no case more than 3 years. These are uh, the points of summary of organizing a management audit. I hope this is clear. If there is any query in this, you may please share it in the query box. So we have discussed about the organizing a management audit. Now we'll discuss about conducting a management audit. So there are two steps to this conducting a management audit. The first is getting the facts through interviews. The auditors should begin by stating the purpose of the audit. So first of all, do not keep your auditee in dark, and tell them clearly the purpose of your audit. No harm will be done to you in case you do that. You will not lose any respect or any mysterious air. You have to prove your work by your recommendations, by your understanding, by your knowledge, and not by the air of mystery. So please clearly state the purpose of the audit, and emphasis should be placed on getting the facts that are essential to review and appraise the functional area under study. Please understand that, please stick to the facts only, and only those facts which are essential to review and appraise the functional area under study. Do not digress from your topic. Do not digress from the facts and their opinions. Just stay on the facts initially, and then exchange between the auditors and managers should be friendly. You should not have any air of smugness. You should not have any superiority complex while doing the audit. It should be of friendly nature, because after all, you will also be the employee of the company if you are conducting the management audit also. Second point could be that you will not face the management resistance, and you will not face any behavioral issues from the auditee when your approach will be friendly. So first point is this: getting facts through interviews. Second is management auditors should know what information is desired. So you should be prepared to ask the questions, and you should have some plan in your mind, or you should have some audit program or audit questionnaire where you would ask What is the information that is required? Then you should ask a number of direct questions to get the desired information. So ask the direct questions, and you can take reference from the audit questionnaire for specific questions. Second is, so first point is getting the facts through interviews. Then sub points are this: stating the purpose of the audit, getting the facts, friendly nature, friendly exchange, know what information is required, ask direct questions. Second point is measuring performance through the management audit questionnaire. So during the interview, the management auditors take a careful inquiry into the important facts. The next step is to analyze the information with the aim of measuring current performance. So analyze the information that is provided to you, and what is the aim of analyzing that information? To measure the performance, to measure the current performance. Once you have measured the current performance, only then you will be able to set the next benchmark and state your recommendations for the same. By way of review, a management audit questionnaire aims at a comprehensive and constructive examination of an organization management and its assigned tasks. So through these review procedures, you'll be able to have a comprehensive and constructive examination of the organization management. Its primary objective is to highlight the weaknesses and deficiencies and for possible improvements. Please understand that you don't need to just highlight the weaknesses and deficiencies and adopt the negative approach. What you have to do is suggest the remedial actions for improvements. And that is the point that you should state in the first conversation, and you should reiterate during the course of your audit, that you are here only for the improvements and you are not here to highlight anyone's weaknesses and deficiencies. Following this approach will reduce the antagonism that the auditee might feel towards you, because you are an auditor and you are going to check his work and going to change his ways of working. So what you should always emphasize is that you are there to improve his procedures. You are there to bring efficiency to his procedures, to his department, so that his department is better aligned, his functions are better aligned to the objectives of the organization. So these are the ways that you tackle with those problems. So conducting a management audit, I'll go through this again: getting the facts through the interviews, 2 points, and the measuring performance through the management audit questionnaire. These are the two basic points, and sub points we have discussed. Now, what is the management audit questionnaire? So this is the example of management audit question. This is not provided in the study material. You need not remember this. This is just for the reference so that you can understand whatever is written over here. So its primary objective is to highlight weaknesses and deficiencies. Management audit questionnaire primary objective is to highlight weaknesses and deficiencies. Basis these weaknesses and deficiencies, you will suggest the recommendations for the remedial actions. It includes review of how well or badly the management functions of planning, organizing, directing, controlling, and coordinating. The questionnaire provides a means for evaluating an organization's ongoing operation by examining its major functional areas. Three possible answers to the management audit question. Excuse me. Yes, it indicates that the specific area, function, or aspect under study is functioning in an acceptable manner. So, for example, if we see over here in the format that I have provided, is the quality statement clear and concise? Is the quality statement clear and concise? Do the staff know how to raise questions and concern what is contained in quality manual? If you say yes, then it indicates that it is functioning in an acceptable manner. All right. If you say no, then it indicates that unacceptable performance is being done and should be explained in writing. So wherever there is no, the findings should be mentioned over there. And not applicable, it indicates that the question does not apply. So, for example, if the quality system manual is not there, you may write that not applicable. It is not applicable. And has an annual management review meeting been held? You can say that not applicable, because this was because during the audit period it was not held. So this is about the management audit questionnaire. Please understand that this is a very simple yet very important area, and you might be asked question on this, and this will be a very easy way to gain some good marks in the audit by reiterating, by reproducing this flowchart and giving some examples, maybe from this format only. And uh, so you should look out for the topics which are simple and can give you good marks, and this is one of those topics. Then last point over here is concluding a management audit. So how would you conclude a management audit? You have organized a management audit. The management has given the necessary capabilities to you to organize a management audit. You have conducted a management audit and you have understood the management audit questionnaire as well. How would you conclude a management audit? Then we'll discuss the report as well. So first we'll discuss about the observations. So do not issue your final audit report before discussing the observations with the auditee. So to assist in preparation of final report, the management auditors normally meet with the management and other concerned personnel for the purpose of discussing any type of any aspect or finding of the audit. Then you can deliberate upon the recommendations. So whatever the recommendations you give should not be sacrosanct and final. Please give your auditee a chance to deliberate upon the recommendations that you are making, so that it is understood that and it will actually improve the processes. So here Ambika is asking, in management audit, to whom to be reported at, as it is to be reported, is it governance body? So Ambika, it depends upon the reporting authority. It is generally reported to the management only, to the higher level management only, and it could be a part of the governance body. It could be to the governance body as well, but nothing is as such is provided as such mandated that who would be the final governing body over here. So we have discussed the board of directors as well, and management as well. So you should understand one more point which was not covered in that slide, that board of directors also include the members of the management. I hope it is clear now. So getting back to the topic, so you should deliberate recommendations, and uh, uh, you should not just recommend them before discussing the alternative recommendations with the auditee and consequences, because those are the people who are actually who are actually process owners, who will actually face the practical difficulties and who actually know more about the processes, on ground, on field processes. So you should discuss it with them. So first is discussing observations, second is discussing deliberating recommendation, third is deciding the scope of the report. Thus, a comprehensive investigation involves a report that is very broad in scope, while in a smaller scale investigation of one or two functional area will result in a less comprehensive report. So it depends on the scope of the audit. I have shared one example. So management may ask an asset misappropriation tracker only, which could be only one Excel sheet. Whereas a report on merger would ideally be comprehensive audit report. So Ambika's question is answered over here as well. So it depends upon who is asking what from the management auditor. So maybe only the asset, the fixed asset department head, who is a part of the management, is asking the management auditor for the verification, for the audit of asset misappropriation tracker. So they will report to that person only in the form of an Excel sheet or whatever the report format that the auditee desire. So this should be discussed with the auditee as well. What is the format that they desire? Whereas a report on merger, which is a strategic decision and which is to be taken by the board of directors, it should be reported to them only, and it will be a comprehensive audit report. I hope Ambika's doubts are clear now. Then the management audit reports, types and purposes. So what are the types of management audit reports, and what are the purposes of those different audit reports? So first is the oral report. So you will be surprised the management audit report could be the oral report as well. So in many situations, the reporting of results will be on oral basis. To some extent, this is inevitable since a part of the actual audit effort is carried on in conjunction with company personnel. In other cases, it is result of emergency action need. It may also be a prelude to more formal written report. So, for example, if the management auditor has come across any fraud, it could be embezzlement or it could be any other type of fraud conducted by employees or vendors or any of the parties, he should immediately inform the concerned and appropriate management orderly because of the emergency nature of the observation. Do not wait until the preparation of the final audit report so that the stop loss can be put in place, so that the steps may be immediately taken to prevent further fraud happening. Second is if the management needs to make an immediate decision basis oral confirmation on some audit issue, they may ask the management auditor to orally confirm something. But as a management auditor, you should ideally write a written confirmation after you have given the oral confirmation, and it should be in a more formal nature, the written confirmation that you give in the later part. So first kind of the report is the oral report. Second is the interim written report. Interim written report in situation where it seems reasonable to inform the management significant development during the course of the audit or before the release of the regular report. So you may come across some significant problems which might not be as urgent nature as the oral reports mandate, but you might come across some procedures that need to be amended as soon as possible. For example, some penalties are getting applicable on you because of some compliance issue. So you should issue an interim audit report and ask the management to deal with those penal provisions as soon as possible. Then uh, also in case of progressive nature of the audit. So for example, if there are three long stages of the audit and which is over a span of certain long period of time, then interim written reports may be issued, which can be followed by a final audit report that includes all the interim audit reports earlier issued as well. So two types of reports we have discussed: oral reports, and the second is interim written reports. Third is regular written reports, the regular reports that we issue to the auditee, and these include the oral reports and the interim written reports as well within their scope. Then the summary written reports. These are the flash reports, and flash reports. These are especially with the prevalence of agile audit concepts that is there in that has now begun in the management MNCs in India as well. So, a concept of flash reports has been introduced, in which various individual reports are summarized and it is issued to the audit committee or board of directors or the higher level of management, for they do not have so much of time to go through each and every audit report that you issue. And this is just a report summarizing the major observations that you have observed, and the recommendations that have been implemented, or the recommendations that need to be implemented, and the conscious decision if they need to make any, if the audit committee or the board of directors need to make any. Also, this is so one more point over there that I missed. In summary written reports, this is also useful tool for the auditor to determine their own, to evaluate their own performance. Also, also the higher level of management gets this feeler of the work done by the auditor, and they are able to evaluate the work done by the auditor and their performance, the quality and the quantity of their performance through these reports. So the auditor should be careful in reporting these reports and should mention only the work that they have actually done and should not exaggerate here as well. Then the management audit report general guidelines on form. These are only general guidelines. No format is provided over here, and which is good for the students. So in general guidelines, they have little liberty to move around here and there. So first of all, there's a title, obviously, short but descriptive. Example, audit report of cash application process. Objectives, the management auditor may describe the objectives of the assignment. So following the above example only, the objective could be to review the principles of cash application process, report on their reasonableness, the deviations from the current process, root cause analysis, and suggest on the overall improvements of effective cash management. So this could be the objective statement. Scope, the management auditor may give a brief description of the activities audited by him. So top 20 cases of unapplied cash more than 90 days amounting to USD 50 million for a period April to September. So how many cases, what is the aging if there is any, above what amount or of what amount, and during which period, and from which report you have taken up the samples. Then the findings, conclusions, and opinions, department wise or in the order of importance, depends upon the auditor only, and whether they have been discussed comprehensively and correlated with other findings with the next year's. Conclusions and opinions should normally follow the findings. Tables or graphs may be used for the presentation. Recommendation, point out defects and make recommendations in broader manner. Avoid providing detailed procedure in the capacity of the auditor. Auditees views. What are the auditees views on the conclusions and recommendations? These are taken in the form of the auditees comments and which is called management comments, action plan, and timelines. We should take that from the auditee. Then the summary of conclusions and recommendation may be given. This is very useful and very important also. And also you can provide the some rag status, red, amber, green status of the observations as well. This is not written over here. This is just an illustrative example. A summary of past observations and their implementation and closure status. So the follow-up that we discussed in the internal audit topic has come back again in the management audit reports as well. So a summary of past observation, their action taken report, implementation, closure status, escalations, and implementation timelines, if any. So this should be provided. So let's quickly go through title, objectives, scope, findings, conclusions, opinions, recommendations, auditees' views, and summary. Steps to prepare the management audit report, planning the audit report. So first of all, you write the first draft and you should ask yourself, what do I want to tell the reader about this audit? Second should be supporting information. Appropriate audit evidence, sufficient audit evidence, preparing draft audit report. So first draft you should prepare and then see where the superfluous information or gap is there, and writing and issuing the final report. Nothing much to it. Follow up of the audit report and action response of the management on audit report. So this is similar to the follow up that we have already discussed, and some of the recommendations issued in the past audit may become irrelevant. Then you should mention that they have become irrelevant and record the reasons for the same. For example, suggestion on manual payment procedure may become irrelevant with the implementation of compulsory internet-based payments. Then there are behavioral aspects in the management audit. So what we have hinted earlier as well, that during the audit you might face behavioral issues from the auditee, and so we'll discuss about them in detail. This is a little interesting topic, so let's discuss that. So management auditors generally interact with colleagues in their own department, staff of the auditee, and the top management who actually authorize them through the statement of policy that we have discussed, right? And while interacting with them, they may face behavioral problems. And behavioral problems fall into three categories that they may face: conflict between management auditor and the other personnel, antagonism, breeding of antagonism. So, and the third is resistance to change. These are the three things that you might face. So please don't appear like this to your auditee. Don't appear like a devil to your auditee. And relationship conflict between management auditor and the other person. So this is regarding the conflict. So management auditors may be employees of the companies, right? They may be employees or they may be external hires. and any other personnel, and other personnel are likely to regard them as as the same way they regard other employees, with a lack of auditing authority. On the other hand, management auditors, being specialists, may think that their approach and their solutions are the only way to resolve the management audit issues. So the problem might arise from the auditee as well, and from the auditor's behavior as well. That's why we always recommend deliberating upon the recommendations, discussing the observations, to reduce the conflict between management auditor and other personnel, and establish a trust. Second is resistance of change. So please understand this clearly as an auditor, whether you are operational auditor, management auditor, internal auditor, or external auditor. You are going there, and you are going to the auditee, and you are going to change their ways of working in one or the other way through your recommendations. So no one wants change in their working. So you may not be welcomed by the auditors, and do not get shocked by that. Do not feel hurt. Do not let your ego get a hit over that. Just do your work, and please explain to them that this is only for the improvement of their processes, improvement in their compliance level, bringing in the efficiency and effectiveness of their systems, and bringing them in harmony with the organizational objectives only. You have no personal motive in antagonizing them, or establishing your superiority over them. So uh, so this is the second behavioral aspect that you might come across: resistance to change. The first is conflict. Third is breeding of antagonism. So do not go there and say, let's not forget who's lead auditor around here. The auditor should be devoid of air of smugness or superiority. So the antagonist means villain. So a breeding of antagonism, that means that the auditee might see you as a villain. And why could he see you as an antagonist in his picture? Because of the fear of criticism that might stem from your adverse audit findings. So obviously, if you'll give some adverse audit findings, he will be criticized, the auditee will be criticized. Fear of changes that we have discussed, changes in the habits, punitive action by superiors, prompted by reported deficiencies, insensitive audit practices. So sometimes even the management auditor or even the auditor should be sensitive, should becomes insensitive towards the auditee, and this should be avoided at all the cost. Reports which are overly critical, reports which focus on deficiencies only, the air of mystery clocking some audits, and the perception that the auditors gain personally from reporting deficiencies. This should be dispelled. These perceptions should be dispelled, and you should be sensitive and develop empathy towards the auditee as well. So hostile audit style: a cold and distant approach, a lack of understanding of auditor's problem, absence of empathy, and parading defects, than helping constructively to improve conditions. So you should not parade their defects. You should not discuss about the defects of one department with the other department. You should not gossip about these audit findings at all, and you should keep your behavior as professional as it is required by the statute, and and even more. So not just the employees with fraudulent intentions, but even well-intentioned employees could feel the antagonism towards the auditor. So just because an auditee is not behaving well and not responding to you in a good manner, please do not assume that there is fraudulent intention with that employee and start treating him in that way. You should empathize with the auditee at all levels. Then solution to behavioral problems. So we have discussed these issues in the these behavioral problems: conflict, antagonism, resistance to change. So what is the solution to these behavioral problems? Demonstrate the objective and benefits of the management audit. You should demonstrate that. Demonstrate means you should show that in your conduct, and not just tell them by words only. That should be demonstrated through your actions and conduct. You should demonstrate that the audit is part of an overall program mandated by higher level authority and for both protection and constructive benefit. So you can demonstrate how cost savings would be brought to their department's profit and loss account, and that will keep them in the good books of the management. The second should be the objective of review is to provide maximum service in all managerial dimensions. Then you should also establish them, you should also tell them that minimum interference with the regular operations of the operating personnel would be there, that you would not come and interfere with their operational regular operational work, and they will not you will not be a disturbance to them. Then responsible officers will be kept fully informed, review findings and recommendations before any audit report. This is very important. This step actually develops and establishes the trust between you and the auditee. You should tell that no recommendations and findings will be discussed with the higher level management unless and until they have been discussed with you, and then do the same. Then you should you should give them the constructive criticism only. Only constructive criticism. Make obvious in the report that the values of his comments in tangible terms. You should wherever it is quantifiable, tell them that this much benefit will be brought to your department. Then you should develop a friendly but firm tone. Disagree without being disagreeable. Criticize without being critical. And you are here only for the improvement, then listing inefficiencies and deficiencies. We have discussed this in detail. If there is any question to it, you may please share it over the comment box. Yes, yes, Rohan. It is the breeding of yes, breeding of antagonism can be asked as a question as well. It is quite possible that it could be asked as a question. And then there is participative approach. So it is well established that auditors' reports have better acceptability if the improvements suggested are discussed with those who have to implement, and they have participated in the recommendations. So you should not hesitate to give credit to the recommendations to the auditee as well, because they know better about the processes on ground. They have on ground knowledge of the processes in daily understanding of how the procedures work and what are the practical difficulties they face. So since they have that knowledge, you should try to take advantage of that knowledge, rather than developing an insecurity. You are breeding the insecurity with them. And you should issue oral or written appreciation of auditees' achievements also, and not just be critical of their performance all the time. The participative approach of the internal audit is likely to be successful as feelings of hostility tend to disappear, giving room to feelings of mutual trust, team spirit, and the proposed recommendations are discussed with the audit. Excuse me. So this is all about the management audit. We have discussed what is the meaning of management audit, what is the meaning of operational audit, what are the differences between them, and then knowledge that the management auditor should possess, objectives, and how it is organized, how it is conducted, how it is concluded, what is the report format, and now the solution and the behavioral problems that a management auditor might face. Now we'll discuss about the operational audit. So operational audit is, as we discussed, is all about the operation. It is a continuous process. It is a continuous process like plan, do, check, act. You should plan the audit, do the audit, then check, then act upon the recommendations, then plan it again. On the basis of above definition, operational auditing is a systematic process involving a logical, structured, and organized series of procedures. You can read this. Definition: a systematic process of evaluating an organization's effectiveness, efficiency, and economy of operations under management control, and reporting to appropriate persons the result of the evaluation along with the recommendations for improvement. So it's as simple as evaluating the organization effectiveness, efficiency, economy, and give recommendation for improvement. It's only that. and is a continuous process. Plan, do, check, act. Remember this diagram. Is a systematic process involving logical, structure, and organized series of procedures, reporting the finding, but also recommends the steps for improvement. What is the difference between internal auditor and operational audit? Internal audit and operational audit. First is the perception. Internal auditors are generally concerned with the internal controls only, and especially that of financial and accounting areas. They they check the accounting books and records to see whether the internal checks are properly working and the resulting accounting data are reliable. Operational audit involves deep analysis of operations. So on the other hand, the operational audit is only concerned with the operations and the deep analysis of operation with respect to SOP, benefit versus cost of operation. Example, when the auditor looks into vouchers to see whether they corroborate the entries in the cash book or physically examine the cash in hand, he is doing this traditional protective function. The moment he concerns himself to whether customers' complaints are duly attended to or whether cash balance is excessive to the need, he becomes the operational field. So it depends upon the depth of the analysis. Operational audit deal with a deep analysis of a particular operation. So when an internal audit conducts a deep analysis of some operation, he becomes an operational auditor. So there is no clear-cut line defining the distinction between the internal auditor and the operational auditor, internal audit and the operational audit. And they might overlap, and it might not be feasible to have that clear-cut distinction. Issues. The basic difference exists in conceptualizing the technique is the auditor's role in recommending correction and installing systems and controls. Statutory requirement should be observed between internal auditing and operational auditing. Internal audit is a statutory requirement, whereas the operational auditing program is as per the management's discretion, management's policy, management's objectives and goals. The objective is to verify the fulfillment of plans. The operational auditing objective is to verify the fulfillment of plans, whereas of the internal audit is the perform both protective as well as constructive functions. Qualities of an operational auditor. A question might come, explain a few positive traits in an operational auditor that might help to make an operational audit and success. Pragmatic, inquisitiveness. Inquisitiveness means curiosity. Pragmatic means practical, professional skepticism, constructive approach, involvement of technically skilled people. So we have already discussed about this. We need not go through this again. Need for operational audit. So these are the need for operational audit. Gravity and interconnectedness of process and problems. Since process, operations, and procedures in an organization are interconnected, so therefore the problems might also be interconnected, and a deep analysis of the operations might be required to come up with the deficiencies that exist and the recommendations to remediate those deficiencies. Then the managers or their aides are generally relied for transmitting the information. So the general role of managers is to just transmit the information rather than analyze something in detail. And the operational auditor, however, are specialized in analyzing the details of the operations vis-a-vis the standard operating procedure. Then the bias-prone information flow. Since the managers transmit the information and their appraisals, their performance evaluation depends upon those information only. So they have that conflict of interest in the transmission of information, whereas the operational auditors will not have that. And therefore, this becomes another opportunity for the operation audit. So for example, sales may be shown at a higher monetary value compared to the previous year. And this may apparently suggest that the function of sales department is satisfactory because this sales has improved. But this may have been caused by a number of factors in spite of really bad performance on sales front. This fact may not be readily known unless one cares to analyze the sales data by reference to notes and explanations to accounts and other relating accounting data. So things could be the result of creative accounting, or creative accounting, by the way, is a very bad term, and it is illegal, and it should not be done at all. Then there could be some data manipulation, and through which some good performance is being shown, but only through the deep analysis, only through the deep dive by the operational auditor can the issues be brought up, leading to the deficiencies, of the various departments, and bringing out the remedial actions. So these are the two examples of that. Then, leaning towards accounting and finance, the conventional internal audit reports are generally lean towards only accounting and finance. See the requirements in the section 138. Who should be the internal auditor? Chartered accountant or cost accountant or other professional, as the board may decide. So chartered accountant and cost accountant, which are specifically provided, have leaning towards accountant finance, but not that much towards operational audit. So who will do those operational audits? Only the operational auditors. We need specially skilled people who can do that audit. Chartered accountant could be that, cost accountant could be that, other professions could be that, but not necessarily. So statutory audit and vis-a-vis statutory audit provide only true and fair. It is even more limited in scope than in comparison with internal audit. And in terms of depth of the operations, statutory auditors do not generally go in that depth of the audit. A continuous improvement system. So it is not a one-time audit. It is a continuous improvement system. It is a yeah. It is on the basis of this plan, do, check, act flowchart. Since it is repeated over here in my slides as well, so you should understand uh, its importance. Then types of operational audit: functional audit, organizational audit, special assignments. So functional audits means categorizing the activities of business such as billing functions. So this is departmental audits generally. So you pick up a department, you does it audit, and you bring out the observations. Functional audit has the advantage of permitting specialization by auditors. Certain auditors within the internal audit staff can develop considerable expertise in an area such as production engineering. They can more effectively spend all the time auditing in that area. A disadvantage of functional auditing is the failure to evaluate interrelated functions. The production engineer function interacts with the manufacturing and other functions in an organization. So, as it is written, the functional audit, if someone develops a specialization in a general audit department of certain function, then that personnel can be used for that functional audit. But the only disadvantage would be that he would not be well versed with the interconnectedness with the other departments and the effects and the ripple effect that it will have on the other departments as well. So this is the functional audit, that is the departmental audit. Organizational audit, this deals with the entire organization audit, such as department, branch, or subsidiary. And organization audit emphasizes how effectively and efficiently functions interact. So the plan of organization methods to coordinate activities are especially important in this type of audit. Third is special assignments. There could be a wide variety of such audits. For example, cause of an ineffective IT system, investigating the possibility of fraud in a division, or making recommendation for reducing a manufacturing cost. So we have this practice question. Perfect Steel Limited has reported a high turnover, 560 crores in the year 2019 as compared to earlier years. But its sales return has also increased to 10% from only 4%. So 10% is a very high level of sales return. The management is concerned about high sales return and feels a need to get the operational done for sales and production department. The company is also having an internal audit department in the company. Elaborate the possible reasons why management is getting the operational done with an internal audit has already been done for both the departments. So here you should emphasize upon the difference between the internal audit and operational audit, because the management is concerned that the internal audit has already been done. Then why should we get another operational? Then why should we have another audit? So emphasize on the importance of organizational on operational audit vis-a-vis internal audit. Say that operational audit is a deep dive into the particular operations and not just the audit of internal controls. And this will look at this can be a special assignment operational audit rather than the all-encompassing internal audit. So, and discuss the points that we have already discussed over here, need for operational audit. Then the objectives of operational audit: appraisal of controls, evaluation of operational performance, appraisal of objectives and plans. This is very simple. You can go through this slide on your own. There is nothing new to this that we haven't discussed. Then yes, Sumit. Operational audit is to check the efficiency of management as well. Not the management, but of the operational managers to carry the business, and how much they are actually implementing the SOPs, and are they actually achieving the operational objectives. So it is little micro in nature in comparison to management audit and internal audit. Uh, so appraisal of the so here is one example of the operational audit: quality checking of credit cards produced by the credit card manufacturing unit with respect to not just its robustness and material, but also the international technical standards applicable to the chips, strips, and encoding. So here a specialist would be required. So you will have to think about not just the physical quality check, but the information security checks as well. So this is a specialized kind of example that I put in over here to make you better understand this operation audit. So here are the objectives again. So you can go through the objectives of the operational audit on your own. Here is the brief summary of the operational audit. Appraisal of internal control for organization objectives, evaluation of operational performance vis-a-vis standard technical specialists, then efficiency and economy with respect to standard procedure, rules, policies, plans, productivity, personal, workload, quality, cost. You can see the operational effectiveness, efficiency, etc. through these criteria. Appraisal of organization structure, delegation of authority, line of reporting, element of IC design, internal control design, etc. Here is the difference between financial and operational auditing. We have discussed that in detail. Then there comes an interesting topic about systems and procedures. So, what are systems and procedures, and why should we read about them in the auditing subject, and why do we encounter it suddenly over here? So, systems and procedures theory form the basis of not just the audit, but any project management activity. With the knowledge of system and procedure theory, what you can do, you can develop and monitor internal controls, you can audit program, you can develop a mobile app, you can conceptualize ERP system, or you can actually launch rockets into the space on the basis of system and procedure theory. Consider the following discussion only a small window through which you can imagine the possibilities to design and operate system and procedures, ranging from innovative audited services to novel business solutions. So, this is just a brief glimpse into the systems and procedures. So, system, what is a system? Example: computer system, machine, engine. So system is a set of objects together with the relationship between the objects and their attributes connected or related to each other and to their environment in such a manner so as to form an entire integral whole. So a set of objects related, connected, and making a whole. That is the system. And business organization is the system, computer is the system, machine engine is the system, and what are the components of business organization? Manufacturing, purchasing, marketing, accounting, finance, research, development, personnel. These all constitute a system. So what we can discuss, if we have to give one term to all this discussion of system and procedure, we can call it design thinking. So here we discuss the system. And the systems we have already discussed, that the set of objects coming together to form a complete whole, which are in, and the set and the objects that form a set are interrelated to each other and to the environment for a common objective. That's the system. Review of system and procedure. To accomplish an objective by means of a system entails three main steps. So if you have to develop a system, if you have to meet an objective of the system, three steps: design, operate, and test. These are the three steps to that. And example is SpaceX designing, operating, and testing rocket launches until they could actually launch one. So this is the biggest example that is in the world right now. Then review of systems and procedures. Again, And the management auditor must concern himself with its purpose as well as the design, and then must decide on the merits as best serving the interest. How would you evaluate the system or procedure? Three steps. First is the system or procedure is meeting all the requirement, whether they are meeting all the requirement, are they operating effectively, and what is the degree of their effectiveness? How much are they actually uh, effective in meeting their objectives? Then review of systems and procedure to determine whether the system or procedure meeting current requirement. The following among other things should be considered, whether they are meeting the requirements. Is system and procedure designed to achieve the company's objectives? Are the design according to the company's objectives? Are they in harmony with that? Whether it is within the framework of the organizational objective of the organization structure, whether maximum performance with least expenditure of time and effort, whether the indicative performance is in logical sequence, whether there is effective coordination, have all required functions been established, has we missed anything, and has the necessary authority been designated to carry out responsibilities? Can any changes be made to improve effectiveness, whether it is flexible enough or not? So the important thing is to see whether it will meet the desired criteria or not. This is all for this discussion. If you have any further question, you may please ask. Yes, you can draw diagrams in the solutions, and it will actually gather you good points if you draw the diagrams and give the flowcharts and quote practical examples over there. That will be beneficial for you. But please make it point to point. Do not just fill the paper sheets. I will reiterate: use the keywords only. Use the bolded points. Use the bolded points. Underline the main points. Underscore them, and emphasize on using only the keywords only and not on memorizing and cramming the study material. Hope you have a good day, and hope you.
Thank you very much, Saurabh. You have nicely explained internal audit, management audit, and operational audit. Hope students, you have well noted in your notepad. And please remember, revise it very carefully. And in case if you have any doubts, you can come back to us on auditing-final@icai.in. I thanks once again to Saurabh. Thanks a lot.
Thank you.
Thank you very much.
Thank you.